We're good to go. Okay. Let's go ahead and let's call the roll.
Senator Ellis. Present. Senator Murphy.
Here.
Senator Nethercott.
Excused.
Excuse.
Representative Andrew.
Here.
Representative Singh.
Here.
Representative Yin.
Excused.
Mr. Kaufman.
Here.
Ms. Long.
Here.
Mr. Reville.
Here.
Co-chairman Rothfuss.
Here.
Chairman Western.
Present.
Mr. Chairman, you have a quorum.
Excellent. So let's go ahead and get started. I know most of you have testified before us before, but if you're new, you are welcome to testify on any of the topics during the public comment section. If you do, we certainly encourage you to, just please make sure to state your name and who you are here with or on behalf of. We should have pulled up my agenda first. I apologize about that.
I think we're all doing the same thing. Get connected to the internet.
That's right.
I believe our first topic is updates from the Wyoming and we have Ms. Anderson who are results.
Excellent. Yep, got it pulled up here. Ms. Anderson, are you with us and can you hear us?
Good morning. Can you hear me?
I think you're a little faint. Can we turn that up on our end a little bit?
Mr. Chairman, can you hear me better now?
Ms. Anderson, can you hear us okay?
Yeah, I can hear you fine.
So you're super faint. I don't know if is it a technical issue on our end or?
Back here, I'm looking on it.
Okay,
1 second.
Ms. Anderson, just hang tight for just a minute. We're trying to finagle things on our end.
Try again, please.
Ms. Anderson, can we get just a sound check from you?
So good morning. Can you hear me better?
Much better. Excellent. Okay, Ms. Anderson, go ahead and
Ms.
got the.
Good morning, Mr. Chairman and members of the committee. My name is Betsy Anderson and I'm the Deputy Chief of Staff and General Counsel for Governor Gordon. And I was asked to present an update on the status of the Stable Token Commission. And so I'm happy to do that. As you know, that was created through an old Enrolled Act 85 during the last session. The commission, which consists of the governor, the auditor, and the treasurer, they all had their first meeting last Monday, May 8th, here in Cheyenne from 1 to 3. I will note that your co-chairman Rothfuss attended that meeting, so certainly he can fill in any gaps or correct anything if I say something wrong. So being the first meeting, the first step of the commission was to review the new legislation. So they walked through that piece of legislation. And then the commission spent the bulk of the rest of the meeting getting a variety of public comment. I think the commission was just trying to get a feel of how to get started. And so they listened to a lot of public comment on how best to proceed, thoughts about how to structure the stable token, and a variety of ideas and issues and concerns that people raised. They did discuss some various procedural challenges that would need to be thought through. Those challenges that were noted were, first, there is no administrator for the commission. I think the thought was that the executive director, when hired, would serve in that role, but between now and then, there is nobody that serves in that role. So staff for each of the commissioners is trying to fill that gap. They discussed a lot about they have the ability under the legislation to appoint up to 4 subject matter industry experts to the commission as voting members of the commission. So they discussed that a lot. And one of the challenges there would be concerns regarding conflicts of interest. Can someone serve as a commissioner who also wants to provide or works for a company that wants to provide services in the creation, issuance, and issuance of the token? Another concern that was discussed, and I wouldn't say it's a concern, just something that they wanted to make sure they were continually aware of, which is that the Attorney General has to determine if the issuance of the token is permitted. And they discussed the timing of that to ensure that they are at a place where they could get that determination from the Attorney General on a timely basis. And then I think the last procedural hurdle that was discussed was the requirement of background checks for the subject matter industry experts who serve as commissioners and the executive director and any staff, that there would need to be background checks, which I think we all agree is important. But unfortunately, that statutory language has to get FBI approval. Those approvals have taken quite a bit of time, but DCI did submit that statutory language to the FBI on March 21st, I believe it was. I think it's the day that the legislation became law. So at the end of the meeting, the commission asked for any additional comments from the public and asked if people could indicate if they were interested in serving as subject matter industry experts. So we have put a link on the governor's website. It's there now, and hopefully should be in the other 2 commissioners' website very soon here, asking for what the commission asked for, which was thoughts and ideas, concerns and issues about the structure and the issuance of the stable token. Also, people are interested in serving on the stable token commission, a place for that. Also a place if you would like updates from the stable token commission about obviously meeting notices, but if RFPs are issued, draft rules, things like that. Trying to build an email database that we could shoot out those types of notices, because we don't have that right now. So those things are there, and I think our office is probably going to try to do a press release this week to hopefully encourage people to go there and provide that information. And certainly if anybody's listening today, I hope they will go there and input their thoughts and ideas. And then at the end of the meeting, the commission agreed that they would meet in about a month. And so we're working on setting up that meeting. So hopefully around June 8th would be the next meeting. And hopefully at that point, we should have all this information gathered and they can make decisions on what they want to take as their first steps. And so that's where we're at this point. So I'm happy to try to answer any questions.
Committee members, have any questions for Ms. Anderson? Seeing none.
Mr. Chairman?
Mr. Co-Chairman.
Thanks, Mr. Chairman. A couple of quick comments in addition to what Betsy was saying. First of all, I'd say it was an excellent first meeting, and I appreciate the good work that the commission did, good questions and discussion to move things forward, as well as, in my view, appropriate approach on putting together a good group of potential additional commissioners, trying to ensure that all of the necessary interests are represented there, and also really paying careful attention to the legislation, going through the legislation and making sure all of the I's are dotted and T's are crossed. So thanks to the members of the commission for that excellent meeting, and for the members of the public that attended. The question that I would have for Betsy as follow-up gets to, are we already hearing anything back in terms of interest for additional commissioners, or any further discussion on timeline for executive director? Because I know those were some some challenges that were identified, as well as like staffing challenges and how those would be met during the interim. So I'm curious if that's looking like it's going to come together in the timeline that was raised during the meeting, or if that might be a challenge that perhaps our committee could help facilitate.
Ms. Anderson?
Mr. Chairman, Mr. Co-Chairman, at this point, we have had some people who have just sent in comments, even though we didn't have the link up yet. But so far, nobody has actually reached out and contacted us that they would like to serve as a commissioner. And I don't know how much of that is wrapped up in the conflict of interest idea and what that means. We are hoping to get some more information about that issue, and that could maybe impact the interest that people have in serving. I am hoping that we'll get some people who are going to put in and say that they would love to help out. There were some, as you said, the public comment was really great and really brought forth some really great discussion, great ideas, and I think all of it was incredibly helpful in making sure we do this and we do this right. And so, if we can, I think if we can get the conflict of interest issue a little more resolved, we could move that forward quicker.
Ms. Anderson, I wasn't able to physically be there, but I was able to zoom in and watch. And I think that was a really good point of the whole conflict of interest. And, in this space, it's still a growing space and a young space. And I think making sure that not only actual conflicts of interest, but also the perceived conflicts of interest as well as a component. And I'll be curious to see the discussion. I think the other thing I thought was really interesting was, should this initial coin or token be a private offering or not? I think it was Mr. Hoskinson raised that discussion. And my follow-up question on that to be was, have there been any follow-up discussions in terms of, do we do a private offering first just to kind of test it before opening up to retail, or has there been any additional discussion on that?
Mr. Chairman, I can't speak for the other commissioners, but I can speak for the commissioner I work for. And he is having follow-up discussions. And just so you know, I mean, he only does that himself because two of the commissioners together is a quorum. So he could never have those discussions with any of the other commissioners present. And so, but he did, some of the public comments and people that spoke very much wanted to reach out to them and speak to them directly after the meeting. And so we're working on scheduling some of those calls to some of those people. And so, and the idea of the private offering, I think several people thought that was a great way to do it. I know Mr. Lupian from UW talked about baby steps. You don't want to just do it all at once, and that doing a first step. And after the meeting, somebody threw out the idea of auctioning off the first token. I mean, there's a lot of, I think, great ideas out there about how we can move forward. But yeah, I do think, and I do, Mr. Hoskinson did mention the idea that maybe selling on the retail market might be difficult until the regulatory framework for the KYC, know your customer, and AML, the anti-money laundering regulatory matters are maybe ironed out before you get to that step. And then he addressed also that there are definitely international concerns. If you're going to go on in a global market, there would be a lot more there to look at. So the idea of doing this in a step, actually issuing it in step process, certainly had a lot that was presented at the meeting that would support that. So, but it is up to the commission as to how they want to move forward.
Mr. Chairman.
Mr. Co-Chairman.
Yeah. Thank you, Mr. Chairman. And there was a nuance to that answer, which really, I think, motivates at least getting a fourth commissioner as quickly as possible, which is that with Wyoming's public meeting laws, the commission members can't talk to one another without substantiating a quorum at this point in time, until they select one additional commissioner, at which point they can go back to freely calling one another. So it's probably good to at least get one of them chosen pretty soon, so that the commissioners can talk things through a little bit from time to time. So, and thank you for being sensitive to that.
Members, any other questions for Ms. Anderson? Ms. Anderson, did you have any additional comments for us?
That was it. Thank you.
Excellent. Well, thank you very much for the update from the governor's office. We really appreciate it. Up next on our agenda,
Mr. Chairman.
Mr. Co-Chairman.
Yeah, before we go on, and get to our federal legislation update, I just wanted to take a quick moment and welcome the new members of the committee that we have. We've got Representative Ocean Andrew, we've got Senator Affy Ellis, and we've got Representative Singh, all new members to the Wyoming Blockchain Select Committee, and we look forward to working with you in this next couple of years. It's an excellent select committee to serve on, as well as welcoming you, Mr. Co-Chairman, in your new role as Co-Chairman of the Select Committee. I look forward to working with you as well, and welcome back to our previous members, as well as our gubernatorial appointees, Mr. Kaufman, Mr. Reville, and Ms. Long, who've been serving for quite a few years with us as well, and have brought a lot of expertise. So good to be serving with all of you again, and good to be serving with you, Mr. Co-Chairman.
Mr. Co-Chairman, thank you. And quite frankly, I feel rather rude for not welcoming our new members. So thank you very much.
We were trying to get on the internet.
Yeah,
I mean, it is the
blockchain
a
committee.
matter of prioritization,
Yes.
and that was order
Yes.
number one of business.
Exactly.
is
So
make our Wi-Fi work. So
but
it's all totally understandable.
I am really excited. I'm very proud that this committee is the most fun out of all the ones we have in the legislature. So it's very exciting. We're really glad we've got these new folks on board. So
Second.
it does not. It does not. Representative Singh, but I appreciate the enthusiasm. It is noted. All right, so let's move on to the next item in our agenda. I think we've got an update from Senator Lummis's office. Do we got Emily? Are we? Ms. Pristach, can you hear us?
Kelsey, make it first.
Yes, I can.
Excellent. We can hear you just fine. You have the
Wonderful.
floor.
Thank you. Thank you, Chairman Rothfuss, Chairman Western, and members of the Select Committee. I appreciate the opportunity to provide an update on digital asset activity at the federal level. My name is Kelsey Pristach, and I am Senior Policy Advisor and Coalitions Director for U.S. Senator Cynthia Lummis. I'm here today on behalf of my office to offer this update. So a lot has happened since the last time my office provided an update in September of 2022. Most notably, the collapse of FTX shook confidence in digital assets markets and exposed hundreds of thousands of creditors, including some U.S. consumers, to loss. That's certainly colored legislative efforts, and it's also emphasized the need for regulatory clarity. Senator Lummis has been clear from the very beginning that it was important to avoid a knee-jerk reaction to the events of FTX and to be thoughtful in a response. And so I'd like to discuss a few major legislative efforts at the federal level related to that, as well as what's going on in the House. And I'll mention a bit about the administration's angle as well. So in the Senate, Senator Lummis continues to work with Senator Gillibrand on the Responsible Financial Innovation Act. This is a bipartisan effort to put in place a comprehensive regulatory framework for digital assets. As such, it's comprehensive. It covers the split of responsibilities between the SEC and the CFTC, responsibility of the banking regulators, stablecoins, consumer protection, tax, and a number of other relevant topics to digital assets. Given the dynamics in the Senate, which require a 60 vote threshold to move anything forward, as well as the various committees who have a stake in this issue in the Senate. So most notably, you have the Banking Committee overseeing the SEC, whereas the Agricultural Committee oversees the CFTC. And so there's a need not only for bipartisan action in the Senate, but also cooperation between the committees that feed into dynamics as we attempt to move legislation forward. It's a considerable priority for Senator Lummis and Senator Gillibrand that there's also room for state regulation in whatever is put forward. And so there's a number of stakeholders that we're working with in order to reintroduce the legislation, which Senator Lummis is hoping will be back out and reintroduced in the next couple of weeks. On the House side of things, the dynamics are a little bit more straightforward. There has been an interest in working on a bipartisan basis in the House. However, so far this year, it's really been Republican-led efforts. Chair McHenry in House Financial Services is working with his counterparts in House Ag. So far, they've released a stablecoin draft, legislation that would govern stablecoins, and everyone's expecting additional drafts over the next couple of weeks. It's quite possible, given the dynamics in the House, that the legislation in the House might move first with the simple majority required there. But that remains to be seen. And then from the perspective of the executive branch, the White House and the administration, the tone in the last couple of months, I will say, has turned more negative on digital assets. We see the SEC continuing to pursue an aggressive enforcement agenda, and a number of statements from federal banking regulators, as well as from the White House, around digital assets that are more negative in tone than what we've seen out of the administration in the past. However, the administration has also stated publicly that there's a need for congressional action in this area. And so Senator Lummis continues to engage with the White House and others in order to move legislation forward. The question I always get asked is something likely to pass in the near future? And I think the landscape's complicated, particularly with the split control of Congress for anything to move this year. Senator Lummis is prepared, while Lummis-Gillibrand's a comprehensive framework, Senator Lummis is prepared to split it into pieces if it seems like there are aspects that might move more quickly than others, if that's what enables something to be done this year. And finally, I just want to mention Senator Lummis's appreciation for everything you're doing at the state level. She often holds up Wyoming and what the framework Wyoming has in place as an example at the federal level. And that's clear in Lummis-Gillibrand, which draws heavily from what's been done within Wyoming. And I know she's very appreciative of all of your efforts to advance digital assets at the state level. That's everything I had prepared. I'd be happy to take any questions.
Thank you very much. Is it Ms. Pristach? Am I pronouncing that correctly?
It's Pristak, actually. Thank you.
Pristach. Pardon me. Pristach. Committee members, any questions? Mr. Co-Chair?
Thank you. And thank you, Ms. Pristak, for joining us. We certainly appreciate your work at the federal level to protect the autonomy and independence of the states. And I wanted to kind of hear your thoughts and comments on that in light of legislation that's being introduced in the House. And when I look at some of the work that the House is doing, it tends to be quite prescriptive in trying to set rules and guidance that the states then have to adhere to, rather than kind of leaving the door open for the innovation that's going on right now. And so I'm wondering, as we look at the House and the potential for introduction of stablecoin legislation in the House, what would the implications to Wyoming and the work that we're doing on the stable token potentially be if that House legislation, as you understand it, to be directed, goes into effect? Is that something that we should be worried about, or is that something that we're generally going to be consistent with based on our current structure?
So thank you for the question. And obviously we're watching this very closely, what's going on in the House. I think it might, I would say that whatever passes in the House, and if it were to ultimately end up on the president's desk, is going to go through a number of revisions, as well as the perspective of the Senate will be incorporated. And it's always been Senator Lummis's priority to take the dual banking system as it currently exists, rely on that framework, and apply it to digital assets. So there will be an opportunity to ensure that the state perspective is incorporated. And there's a lot that the state does really well that we think that Senator Lummis thinks is very important, that's accounted for, particularly consumer protection, but also considering state perspectives and stablecoins is going to be critical as well. So at this point, what's in the House is a discussion draft. So I expect that there will be additional opportunities for feedback before that moves further. But we'll certainly be watching this very closely.
Mr. Co-Chairman.
Thank you. And I appreciate that and know that, yeah, it has to obviously come through you and your chamber as well. So I'm assuming that that before the Senate were to support it, it would hopefully be consistent with our efforts here and that we know that you'd be looking out on our behalf there. Another question gets to kind of the ongoing concern with banking and challenges for banks and banks becoming insolvent and struggling in recent months. The original narrative seemed to link that to cryptocurrencies and digital assets and somehow tying it into this innovative space. Do you still see that narrative as having steam in Washington, D.C.? Are people still somehow linking digital assets to the challenges of fractional reserve banking and the illiquidity of the banking institutions, or are folks in Congress now understanding that in fact that isn't the cause and might even be the solution? How is that conversation progressing?
Sure. Thank you very much for the question. I think we've moved on from the narrative as it was originally put forward in the immediate aftermath of the bank collapses. Senator Lummis has always pushed back on that narrative. Superintendent Harris from New York DFS also immediately pushed back, saying she didn't see a link between crypto and the banking collapses. There are going to be a number of hearings this week in the banking committee where the senators will have an opportunity to question regulators as well as senior management at the banks that were involved in the collapse. And so I think it'll become more clear the direction of concerns along those lines, but it's certainly not something I have heard put forward as strongly recently as the cause. I think the conversation has shifted much more to risk management and regulatory oversight failures as being the primary causes.
Excellent. Thank
Mr.
you.
Co-Chairman. Mr. Prestag, I did have a follow-up as well, and I forgive my ignorance, please, but how in depth does the House legislation go currently as drafted in terms of the regulation of some of the state's ability to issue some of these types of tokens?
To be honest, I might defer a bit on the question rather than get into the details of a House proposal, but I'd be happy to offer comments, written comments if that would be helpful. I just don't want to misspeak for House legislation where I know discussions are ongoing.
Totally understandable. And obviously as legislators, we know things can get amended quite quickly and change the shape and form of legislation. So I do appreciate that. Committee members, any further questions? Mr. Co-Chairman?
Yeah, following up one more on the House legislation is, you said early on that was being drafted as bipartisan, but at this point it tends to be shifting more towards majority led in the House. And I guess that's a little bit of a concern. The Senate has taken this on as a bipartisan approach, and Senators Lummis and Gillibrand have led that bipartisanship. What, and maybe this is too much commentary, but I'm curious why that's being challenged in the House, and if there is still an ongoing effort to develop bipartisan solutions, which I think are going to end up being a lot stronger. Obviously, that's what we've focused on in Wyoming over the years, than trying to turn this into partisan politics. So is there anything that can be done to support that on the House side and try and get this a little bit more out of partisan politics and kind of into sensible politics?
So I will stress that Senator Lummis. Oh, I'm sorry. I will stress that Senator Lummis believes it's very important to move forward on a bipartisan basis. I think what we're seeing in the House is late last year that at the time Chair Waters and Ranking Member McHenry were working together on a draft. The most recent version is now Chair McHenry's draft without necessarily co-sponsorship from Ranking Member Waters. I think some of this is dynamics following likely the changing control of the House. But obviously for something to come to the Senate, it will have to be bipartisan in order to garner 60 votes. So we're waiting to see where ultimately the House proposal lands. But I think where we ultimately end up and where Senator Lummis hopes we end up with is a solid bipartisan compromise that protects consumers while providing the regulatory clarity that's necessary for this industry to move forward.
Great, thank you.
Mr. Co-Chairman, Ms. Pristek, any further updates for the committee?
Nothing further from me. Thank you.
Well, thank you very much. I will just on a personal note, while I don't necessarily agree with Ms. Senator Gillibrand on a lot of things, I really do appreciate her willingness to step up on this, and I have a lot of respect, of course, for Senator Lummis and her leadership on this and working across the aisle to get this across the finish line. I think there's a lot of really good things that come out of this. So thank you to the senator, and thank you very much for testifying.
Absolutely. Thank you for the opportunity.
So I think next on our agenda is we've got an update from the University of Wyoming from Mr. Lupien. Obviously, we know who you are, but just for the record, if you wouldn't mind just introducing yourself.
Thank you, Mr. Chairman, and welcome in your new role. And Co-Chairman, thank you, and members, thank you very much. I am Steve Lupien. I am a faculty member and the director of the Center for Blockchain and Digital Innovation at the University of Wyoming. What I'd like to report about is a couple of things today, but I'll be brief. We do a lot at the university to support the legislation that you've passed historically to try to bring jobs and economic development to the state. So I'd like to start out with talking about our academic programs. The blockchain programs at the university continue to grow. And in fact, we have a blockchain minor, which is the second fastest growing minor program on campus today, only behind hospitality. And the growth of that program has caused us to actually expand the course offerings. So now the core courses are offered every semester, where before we kind of timed them so that you would do one and then the next. But with the demand that we have, we're now offering those every semester. We have approximately 160 students right now in the taking the blockchain specific courses. And we've expanded blockchain into a number of other programs, including the supply chain courses, entrepreneurship, project management, as well as over in engineering, both in computer science and in petroleum engineering. So all told, we have over 250 students at the University of Wyoming that are participating in blockchain education in some way or another. Just recently, I've also been given kind of provisional approval to also begin to include applied AI along with the applied blockchain courses that we're teaching. And our goal is, and it's not a goal, it will happen, is that this fall we will have our first applied AI class. Additionally, engineering in cooperation with the School of Energy is going to be launching a master's in petroleum engineering with a concentration on blockchain, and working with Ben Cook, who runs our MBA program. We are looking to create a master's of business science in the College of Business that has a concentration in blockchain. We're choosing the Masters of Business Science because MBA programs aren't recognized internationally quite like they are here in the US. So the Masters of Business Science should attract international students. And there's really only one recognized master's program in blockchain right now, and it's offered through a university in Crete. So we believe that, University of Wyoming would be pretty attractive to those that really want to expand education, certainly not knocking their program, but we're a Division I university in the United States. Lastly, on something else I'm particularly proud of is we've stood up a blockchain and law club, and it's got some pretty robust membership. It's being supported by myself and Professor George Moskery. And I'd additionally like to thank Member Kaufman, who is going to be taking a number of those students as interns this summer. So I think we're beginning to develop more and more around the blockchain and law. From a fundraising standpoint, we continue to be pretty successful in spite of what's going on in the digital asset economy right now to bring in funds. In fact, last week alone, we were able to secure another $125,000 in funding to support the hackathon, as well as some educational programs on campus. And since we've started our programs at the University of Wyoming, we've been able to raise just shy of $3 million to support blockchain education. And we are supporting programs through the Blockchain Center over in engineering. We are funding the law practicum at the law school, as well as funding a number of programs in petroleum engineering and cybersecurity. So, and again, all of that is possible because of the enabling environment that you've all kind of created. We are in the planning stages right now for our 6th annual WYO Hackathon. So it's hard to believe it's been going on that long. Really started from a vision from member Caitlin Long back then, and members of the blockchain community that wanted to give back to Wyoming for the work that you've all done. So so we've just started that planning now. And as many of you know, we coordinate your Laramie meeting around the same time as the hackathon. So you'll be able to participate and meet some of the folks. We are incorporating something new this year in the hackathon, which is esports. Esports is rapidly growing on campus. In fact, the esports club is now the largest club on campus. I think for the first time, it's exceeded swing dancing club. So it's so clearly very very popular. And as many of you know, esports is now becoming an intercollegiate sport. And University of Wyoming competes against some of our rivals in esports, and we've got a esports facility in the bottom floor of our union. So we're going to be incorporating some of that because there's just a natural tie between esports, where digital assets in various forms are kind of the commodity that is used. So those individuals that embrace esports almost very quickly understand digital assets and how they can be used. So I think that's a natural connection there. And we're also going to be working with the School of Computing and holding an academic symposium during the hackathon this year as well too. That'll be the Wednesday after the day after you're all there. So I'll certainly get invitations to that, and for any of you that are interested. And probably the most important thing is we have signed a pretty popular country western star named Travis Denning to do our Friday concert this year. So last year's concert, we had just shy of 2,000 people attend that concert, and for the University of Wyoming, that's a pretty good size event. So we're hoping to exceed that this year. And I want to just wrap up with talking about some of the applied projects that we're working on through the Center for Blockchain and Digital Innovation. We're working with 2 outside companies to develop NFT tokens around carbon capture and carbon sequestration. One of them uses a novel approach for for recording carbon that is captured in soil through farming and agriculture, and another one that is a carbon injection into wells technology. And they've got a unique technology for measuring how the carbon is injected, and also in making sure that it stays underground. So we'll be creating some NFTs there. We're also working with the Association of Research Libraries to create NFTs for items that are in university library collections that may be available. What we believe a lot of people would be interested in purchasing NFTs. One of them that I think is amazing and illustrates what kind of collections universities have is the University of Wyoming has all of Stan Lee's business contracts. So anybody who's a fan of the Marvel universe understands, you could own a piece of that. And what's important about that is that universities can, and the libraries can potentially monetize that without, having to sell the item. You can keep it in the collection. So it's a win-win for the institution as well as for people that want to participate in that. So we're going to kick off that program this summer. And as many of you know from previous reports, the Blockchain Center received a grant from ARPA through the WIP initiative to provide blockchain education to Wyoming's high schools. And we're in the final process of completing the curriculum material for that. And that'll be introduced into high schools this fall through cooperation with the Wyoming Department of Education. And we are also working closely with our community colleges to help them incorporate blockchain programs. In fact, this Thursday and Friday, we're bringing faculty members onto the campus of University of Wyoming from the community colleges, specifically around blockchain training, kind of a train the trainer approach, get them comfortable with the technology, and we're going to work with them to incorporate programs that cater to the individual needs of each of our community colleges. The last project we're working on right now is kind of a credentialing project. This was originally kicked off in cooperation with LinkedIn, but that project has changed a little bit, and we are now working with a number of other universities on creating skills-based credentials that could be stored in a wallet. And it's one thing to say, hey, I've got a degree from the University of Wyoming, but if we could also have verified credentials that say I've got a degree from the University of Wyoming and I have unique competencies in blockchain, supply chain, et cetera, then we want to be able to have students and graduates have that as part of a digital wallet. And that ties in with with what we want to do with credentialing with the ARPA program, but also the Wyoming Department of Education wants to have a high school credentialing program as well too. So I think all of those we can work together and kind of have a program that will kind of tie in with each of those different initiatives. And then lastly, following up on some of the comments from the governor at the stable token hearing last week, the university is going to stand by and be a resource to the commission in any way we possibly can. The governor even mentioned perhaps holding the meetings at the university. I have reached out to administration, and they're completely on board to support you and the governor's office on that initiative in any way we can. So thank you, committee members, and if there's any questions, I'm happy to entertain.
Thank you very much, Mr. Lupien. Really appreciate the update. Committee members, any questions? Representative Singh, any questions? No. Representative Andrew, any questions? Okay, test out the new guys. Mr. Chairman, actually, real quick, if I may, my apologies. Actually, Mr. Lupien, you really kind of sparked my interest with just using NFT technology around the concept of carbon sequestration. You could just maybe do a little, or expand a little bit on that, and then what that would entail conceptually, technically, all that stuff.
Thank you, Mr. Chairman. Yeah. the carbon sequestration and carbon capture, that technology is known, and there's many different ways that can be done. The biggest challenge is, how do you monetize that? There are programs like the 45Q program where you can get tax credits, but tax credits are entirely different than income. And NFTs allow you to actually go out into an exchange and monetize a program like carbon sequestration. So if we can identify a particular metric ton of carbon that's being sequestered through a particular process, and that's where some of these proprietary technologies that actually measure it come into play, then there's a number of different carbon exchanges that are exist in the world, and many of them are continuing to grow. And by creating an NFT, you can make a marketable product that can be sold. And the folks that are looking to purchase tokens like that are there's a couple of reasons why you would do that. One is your company has decided they want to be carbon neutral by a certain period of time. Now you can, there are two ways you can become carbon neutral as a business. You can clean up your operations as much as you possibly can, but to truly become carbon neutral, you're going to need some sort of offset. And so NFTs can provide that offset. And what's unique about using an NFT for that is it also exists in the secondary market. So you may purchase an NFT for this particular carbon technology today because it's important to you as a company, but 5 years from now, you could potentially sell that NFT on a secondary market, recoup some of your costs, and invest into a new carbon offset type of technology. So it gives businesses a lot of flexibility and turns something that might be an expense into something that could be viewed as an asset. And the second reason you might do that is more and more states and municipalities are requiring certain offsets for permitting purposes. So, if you're going to, build a facility that would have, an environmental impact, then you may have to purchase some offsets to prove that you're actually, again, offsetting the impact that you're making. And in that particular case, the NFTs would be retired and not have a secondary market. So I think we're going to find, as the world gets, more and more involved in ESG, and using NFTs to monetize many aspects of that is going to become, I think not only more viable, but probably more, considerably more common.
Thank you very much, Mr. Lupian. Of course, the trick question is, will those be securities?
Well, good question. And I think we'll discover that in the, I think we, as was testified previously, I think we've got some legislative clarity that needs to be done. And that's certainly right now way outside my pay scale, Mr. Chairman. So I'll let others deal with that.
Thank you, Mr. Lupian.
Like yourselves.
Mr. Co-Chairman? Or Senator Ellis, please.
Thank you, Mr. Chairman. I was just curious on the rollout of the high school plan. I think it's one thing to develop curriculum, but then to actually have a plan of getting it in classrooms and getting teachers comfortable teaching the material. I'm just wondering if you could give us a little information of what the plan is to actually get high school kids learning that rather than just having the curriculum developed.
Through the chair,
Mr. Lupian, go ahead.
Thank you, Senator. Well, first of all, we are working with the Wyoming Department of Education. And again, we this summer in particular, there's a number of different conferences where the faculty in certain disciplines all get together. And last year we began kind of a train the trainer program, and we're continuing that again this year. Blockchain education in the high schools is going to be offered either through the computer science faculty, the business, or the entrepreneurship faculty. And so we're working with each of those faculty members to make sure they're comfortable with the program. And not only are we developing curriculum, but we're also developing essentially training material for the faculty, as well as teaching aids for the faculty. And we recognize that it'll probably take a couple of years to, of growth in the development. But, there are high school faculty that have already expressed a strong interest in wanting to include this into their curriculum. And, we're working with them on a one-on-one basis to make sure they're comfortable. The program itself is pretty straightforward for high schools. It is a series of 12 video modules that the faculty can play, and there are questions that the faculty can then ask the students, and we also have we're developing an accompanying graphic novel to kind of go with the video module, so that the students can get a kind of a second medium for education. And we're just going to grow this organically at first with the faculty that show interest, and then hopefully expand that. One of the interesting aspects about this program, it is funded through the WIP initiative. And part of the WIP initiative is to help build Wyoming's economy post-COVID. And we have created this program so that could also be marketed outside of the state of Wyoming. Because the WIP initiative is paying for it, it's free for any Wyoming educational institution. Everything is free. But we are working with colleges and high schools across the country to actually market this program to them as well too, and bring revenue back into the state through that program, because it was WIP funded. The revenue from this will go back to the WIP initiative. So I think we're, as we build success here in Wyoming with our high school students, we're also going to market that outside. And there's a number of foundations. One of them that's pretty impressive is the LeBron James Foundation, which purchases programs like ours for inner city kids to learn technology and in ways out of the inner city culture. So I think we're going to start small, and we're going to slowly develop it. But I think over the next couple of years, we're hoping to have some pretty broad adoption.
Thank you, Mr. Lupien. Senator Ellis, any follow-up? Seeing none, we'll go ahead and start outside in. Mr. Ravel, go ahead.
Thank you, Mr. Chairman. A question for Mr. Lupien, just going back to the carbon capture NFT idea, which sounds incredibly promising. The process of carbon capture is sort of a one and done thing. And I'm wondering how that then can translate to a non-fungible token where you've got a secondary market. It would seem to me that it's done once, it's sort of fungible, but I want to better understand how you can then take that one-time capture and continue to trade it in the future. Maybe I'm not understanding correctly.
Excellent question. Mr. Lupien?
Yes, through the chair. Mr. Ravel, yes, we're going to be experimenting with, the viability of the secondary market. It's so new right now that there's not really a robust secondary market. A lot of it is, yes, it's a one and done from a capture standpoint, but the sequestration and keeping that carbon out of the market, does have value that we believe some companies will invest in. I mean, there presently is as small as the NFT market is in this space is. There is a secondary market today. So I do think that, of course, the real value is going to be in the capture and the creation of the specific token. But again, I think we'll see how the market reacts as we get more and more involved in this.
Mr. Ravel, follow-up?
I'm wondering if I can apply for the internship at Mr. Kaufman's firm. It's like,
Mr. Ravel, I too am curious how that process works. I think all of us are. Seeing no further follow-up, Representative Singh.
Mr. Chairman and Mr. Lupien.
Yes.
So my question for you, I wanted to see if you could elaborate more on the high school credentialing within the blockchain.
Right.
I was curious if this was just for academic purposes. Was the intention to also include disciplinary measures, and how would that coordinate within other high schools across state lines?
Mr. Lupien, go ahead.
Through the chair. And thank you, Representative. We're not sure yet, to be honest with you. As I mentioned, we're really looking at a three-pronged approach to credentialing. One of them, university credentialing by including skills. And that was the program I mentioned with LinkedIn, and then credentialing with the high school education program we're doing through ARPA. We just became aware that there's a secondary initiative being funded through WIP directly to the high schools to create a credentialing wallet. We are just in the process of meeting with the WDE folks around that. Quite frankly, we're not even sure if that particular wallet will be blockchain based or not. The two wallets that we're working on presently at the university will be blockchain based. So as we get more information, I'm certainly happy to send you an email and update you on that. But it's I don't have all the answers now because we're just beginning the exploratory process on that.
Mr. Representative Singh, follow up.
Thank you.
Excellent. Committee members, any further questions? Mr. Co-Chairman.
Thank you, Mr. Chairman. Mr. Lupien, I did want to follow up with you on the law school program and learn a little bit about, it sounds like we've got some internships. We've identified this, and you and I have talked, and the committee's talked over the last few years, that honestly, this is one of the key limiting factors, I think, for development of this space in Wyoming is not enough attorneys that are familiar with the space. So can you provide a little bit more context on how this is growing and what it looks like? And I'm going to ask the same question about accounting as well, where I think we're a little further behind, but we know that we need accountants that are expert in this space as well. So if you could help us out.
Mr. Lupien.
Yeah, through the chair. Thank you, Senator, for that question. First of all, we've got a remarkable faculty member over at the School of Law, George Moskery, who has embraced this technology and has been, expanding blockchain presence over at the university. Additionally, the Blockchain Center is funding a guest faculty member, Dr. Julie Hill, who is teaching some courses. So again, that's part of why we raise funds, is to bring in faculty like that. Senators, as you know, a couple of years ago, we had begun some discussions around potentially creating a JD MBA, which I think would be a really remarkable program and kind of one of its kind. A couple of things have kind of sidelined that temporarily. Certainly, one being that there's about to be a change in leadership at the School of Law. So it's my intention, as soon as that leadership change takes place, working with the College of Business and Ben Cook, who I mentioned earlier, who are both really motivated to do a program like this, to be able to then approach the School of Law and kind of bring back that concept. Certainly not dead, but it's kind of taken a sideline. As for accounting, the blockchain minor program is housed in the College of Business in the accounting and finance department. And we have been and a sizable number of the blockchain minor students are either in the entrepreneur program or finance or accounting programs. So the accounting in particular as a department is in the process of bringing aboard a number of new faculty. And so that faculty, as we're interviewing them, we are talking to them about, digital assets and kind of how emerging technology is going to be impacting their space, including AI. AI is going to disrupt accounting, pretty significantly. So we are incorporating all that into our programs, Senator, and our hope is to continue to keep expanding our applied business technology programs, across the campus, frankly, as this technology becomes disruptive to different, business disciplines.
Excellent.
Mr. Co-Chair, any further comments, questions, committee members? Well, I think that that does it. Thank you very much, Mr. Lupian. We
Thank you,
appreciate the
Mr. Chairman,
update.
Co-Chairman, and members. I'm always available with any questions you have. Thank you.
Thank you very much. I think, and also for any of the new members, for every single agenda item, we have a public comment period. So if anybody wants to make a public comment, you're more than welcome to. I do ask, though, that your comments are relevant to the agenda items we were just discussing. You're more than happy to comment. Other agenda items, you just have to wait until that particular topic does come up for discussion. So is there anybody that wants to testify? Please go ahead, and again, we know who you are, but just introduce yourself and who you're with, please.
Thank you, Chairman. My name's Scott Moeller, and hello to co-chairs and to all the members. My name's Scott Moeller. I'm one of the organizers of the American Crypto Fed DAO. I'm here with Joe Xiaoming, who is another one of the organizers. And I'd like to comment about the stable token. But before I go there, I really kudos to the university. So Steve, fantastic updates. I am so excited to hear about what's happening at the University of Wyoming. Things that stuck in my head, the minor in blockchain technology, the demand for that being so high that they had to add additional classes. It's fantastic. Okay, it's what you want to see with all of this. Okay, is where there's a desire and a demand for this this technology and for prosperity among it. So so that, yeah, just needed to say that. What I'd like to, we did submit some written testimony, but really I don't want to just reiterate all of that, but really give you kind of the mindset of where we're coming from on that. We were present at that first session of the Stable Token Commission last week in Cheyenne. And I understand the discussion about like creating a token and testing it out privately. We're coming to it from the perspective of the retail use case. And I really want to define that when we're saying retail, we're not talking about using the token as a tether equivalent or a tether replacement or USDC replacement. Retail use, okay, you're using it for real world transaction and it's a transmission of value. So coming to that, we're looking at how can that Wyoming stable token, how do you set the pathway for billions of dollars to the state in terms of the float? And so to that, we really want to advocate that if there's an agreement to generate a Wyoming stable token and you expect others to use it, then there has to be an encouragement for the state to use it, for the state to incorporate the Wyoming stable token into the ordinary course of business. And for that, and what we have in the written testimony really kind of advocates three policy measures that could occur. One, for the state to natively accept Wyoming stable token as a merchant. Okay, so for payment of fees to the state, things where right now that you have to ask the individual to pay a 3% credit card fee, they could pay in Wyoming stable token, and that's a real-time credit push transaction that you see occurring on the blockchain. Second would be for the state to consent to receive the Wyoming stable token natively for payment of sales tax and fees. And to me, I think that's really critical. And I'll come back to that in a second, but really, and the third is for the state to establish a method of a preference for spending the token, so keeping that token in active circulation. So when the state receives the token, either as a merchant or as a payment for fees, that they choose to spend it at vendors that elect to receive that token. So it's keeping that token in active circulation. I want to go back to 1 second about accepting that token for payment of sales tax and why I think it's critical. For merchants, You don't want to have to ask the merchant to take an extra step to convert the Wyoming stable token to the dollar in order to make a payment of tax. Because what are you asking the merchant to do there is you're asking them to take an extra step. And for that Wyoming stable token to become a secondary method of payment, not a primary. And what we're looking at is how do you make that Wyoming stable token an ordinary course of business, something that they hold on their books, something that they preference, and that it increases the circulation. And really the most key component I would see would be the acceptance of that token for tax and the acceptance of that token for payment to the state. Joe, is there anything you'd like to add that I'm missing?
Thank you, Scott. Thank you, Chairman. Thank you, all the members of the Select Committee. The Wyoming stable token is really a revolution at a starting point. So we are in a process in discussion with largest U.S. merchant group. They call it merchant advisory groups. They process more than 60% of the credit card and debit card in this nation. So they are looking for real low cost payment. So we figure out how to do that together with those merchants. So there is one major issue is about sales and use tax. So they have to pay that to the state. And if they have to convert that back every time of sales and use tax, that's a very big problem for them. And they see if the state can accept the Wyoming stable token you create by the state themselves, that is a huge support. And if they accept that, if they accept the Wyoming stable token, and those larger merchants, probably I believe the state, cities in Wyoming can also accept that, accept the Wyoming stable tokens, even can pay salaries, government employees in the future. So this is an economy, I mean, ecosystems can really build. And those nationwide merchant, they are not going to use Wyoming stable token only in Wyoming. They have more stores outside of Wyoming. Once they test everything working here, pay sales tax and accept the consumers pay their in the Christmas, in Thanksgivings, all those transactions, huge transactions in concentrated days. Once they test this, they were deployed nationwide. And if the state of Wyoming accepts as a sales tax payment, California state may accept that too, because those big nationwide merchant will ask why California state cannot accept the Wyoming stable token. It's for efficiency. So all this is just the starting point. And we really hope the state of Wyoming start considering Wyoming stable token as a representative of US dollar, and it has a lot of securities, but on blockchain. That's a huge difference. A lot of things can be automated just because they are on blockchain and shared ledger. So this is a revolutionary. We thank you for all this committee has done.
Well, thank you very much for your testimony. We certainly appreciate it. Committee members, any questions for the folks at American Crypto Fed? Mr. Co-Chairman, go ahead.
Thanks. And Mr. Chairman, Representative Andrew's been pushing for a while to get to the point where there is the capacity to have automated payment of sales and use tax, and that model and the model that's being discussed is clearly one of the reasons why the state needs a crypto asset, a digital asset that it could accept from the population, from the people of the state of Wyoming, whether it's for sales and use tax, payment of services or anything else, as one of those puzzle pieces that is really necessary to enable this space. So I appreciate the vision that's laid out in 1 and 2. And I think the 3 point there follows on really from just if there's enough use, then it doesn't make sense to have to convert it, that you'll want to keep it circulating for an ease of use in facilities. So that 3 is an aspiration point of, when it's working and when the system is fluidized, we should achieve that 3 point where there's a hold and then a reuse of the stable token. So I do see it certainly as enabling Representative Andrews' vision, which is kind of laid out here of ensuring that you could have a seamless sales and use tax transaction. You could have it even automated by smart contract at some point, and life becomes good and easy when we achieve that. So thanks for the testimony. Thank you, Mr. Chairman.
Thank you, Mr. Co-Chairman. Again, members, any questions or comments? Sorry, Mr. Moore, please go ahead.
Thank you, Chair. Just a point I'd like to make onto this. We want for the merchants as well as for the state, the use of the Wyoming stable token to be their ordinary course of business. We don't want it to be an additive thing that they have to think about too much, but rather they elect to use it, they preference it because it's more effective for them in their business. So that's really where acceptance of this Wyoming accepting their own stable token for tax sets a precedence for the merchant advisory group to be able to use that in every state. Okay, it shows the pioneering work that Wyoming has done, and it'll show and I understand that this is very aspirational at this stage. This is we're moving forward, but really this is the goal that we see here, is for it to be used in the everyday course of business for individuals, for businesses, and for the state.
Thank you, Mr. Miller. I will certainly say, I think, these questions you raised, what would be a merchant? Reconciling strictly, end to end of the transaction in these two types of assets. And these are really good questions. I do agree that they're very aspirational at this point. I think the big question I think we need to answer is, will this initial iteration be as a private offering to really kind of work out the kinks? What does this look like? What is the demand? Is those kind of things. And I think if things go smoothly, then we can transition to potentially that retail setting where we do get that type of transactional volume to really get to the scale that you're talking about in some of these questions. So I think your point is really well taken, that these are really good questions that need to be addressed. And I think, as you say, the potential is, it may not be immediate, but the potential is there and it is big.
Thank you.
So,
thank you.
Please go ahead.
Thank you, Chairman. Just to follow up about your comment, and our blockchain will be on EOS.io. Its starting point will be 21 large US merchant. We cannot start as one merchant and one small merchant. It must be decentralized. So decentralized, start that. We are building that business plan. And we hope we can submit that business plan in next couple of months, because those big merchants, their each internal decision is a big decision for all of them. So, but we still in discussion with them, and any sign, say the state is fully support this Wyoming stable token. And the taxation is a big issue for them. It's not only say, hey, we pay this to the state, but also show the support of the state. And also they operate nationwide. If this Wyoming stable tokens cannot be accepted nationwide, they will say the scale is too small. So not only the sales use tax, but a lodging tax. A lot of people, they come out from other states, they hold this wallet, they want to spend in Wyoming. So it's a holistic discussion and the legislation. So we hope this committee can lead the entire country and bring those large US merchants to this state. At least they operate everywhere, but they use a Wyoming stable token.
Certainly appreciate that. Let's go outside in. So we'll start with Ms. Long and then work our way to Senator Furphy. Ms. Long, go ahead, please.
Thank you, Mr. Chairman. Just picking up on your comment about some of the big issues. One thing we didn't cover earlier in the DC update is that there have been 2 material crackdowns on stable coins coming out of Washington, DC in the last few months that throw a lot of question into the structure of how this is going to work. And I'll just reiterate my comments from the previous select committee meeting, where the easiest way for the state to do this legally is to fit it within a tokenized municipal bond. And the challenge with that, though, is if it's a security, you don't presumably run into problems with the SEC, but it's not useful in merchant payments because it's a security, therefore it has to go through broker-dealer. If we being the state of Wyoming, pursue this as a payment token, you run smack dab into the issues that Washington, DC has raised with payment tokens in the last couple of quarters. So I just want to be sure that that's on the record, because we didn't talk about that in the earlier update. Senator Lummis's office didn't say anything about what she's doing in the face of both the SEC and the Fed throwing major obstacles on stablecoins. Thanks.
Thank you, Ms. Long. I'm sorry, Mr. Co-Chair, go ahead.
Yes, and Ms. Long, I think you summed up that conundrum very well, that this is a challenge that the entire industry faces. And honestly, it's one of the reasons why I think it's appropriate for Wyoming to step into this fight, because as a sovereign state, as opposed to as a corporation, we have the capacity, I think, to step into it a little bit harder and to start from the standpoint that I think a lawsuit would have to probably be filed against us to cease our operation, and then have effectively have governance on our side in this fight, as opposed to a circumstance where a corporation can just receive a letter from the SEC and that letter says shut down or we send you to jail. And honestly, I think particularly with what has been coming out recently, the reality is the stakeholders want a payment token, right? And they want a variety of payment tokens, and they not just Wyoming, but this is what is desired in the digital asset space, is the ability to transact, to recognize that a payment token is not going to be a security. Doesn't need to be a municipal bond, doesn't need to be a commodity. It's effectively operating as we write in statute. It's a US dollar held in trust by the state of Wyoming on behalf of the token holder. So you're paying in dollars with a Wyoming stable token. That's the intent. You're paying in dollars. You're not paying in coins or new currency. You're paying in US dollars. And honestly, if the feds don't want to see it that way, then this is just one more fight I think we probably have to fight. And if not us, who? So I think it's well worth taking on, because it's the right approach, and it's the way this sector needs things to go to be effective. The idea, once again, that the SEC just gets to shut things down because they want to classify something as a security, which in my view is clearly not a security in any way by any intent of securities law, but wants to be characterized that for federal control. So we'll see how it goes.
Thank you, Mr. Co-Chair. And I might just also tag on to that. I certainly agree that if this is a fight that needs to happen, then by God, let's do it. Ms. Long, I was curious, maybe if you could opine on the concept of super negotiability. I know some folks I've seen around this tokenization. You'd maybe touch on that and the concerns there.
Sure. And just to follow up to Mr. Co-Chairman's comments. You are in the right political party vis-a-vis who's in control in Washington right now. It's your political party who has been leading this crackdown. So you're in a very interesting position to potentially negotiate something. I would encourage you to do so because it's been an all of government Biden administration crackdown in which the Federal Reserve clearly is participating. And that's going to have to be a political solution. So I would encourage you to get involved in Washington, D.C. if you're not already. So to answer your question, Mr. Co-Chair, on super negotiability, that is a UCC, Uniform Commercial Code item. And as you know, it has become a political hot potato. We've started to see some states, South Dakota, Texas, Florida, Alabama, and I'm sure I'm missing others that have really pushed back on UCC Article 12 that recognizes government issued digital central bank digital currencies as an electronic instrument. Now, this got blown way out of proportion because the state commercial law, as you know, doesn't have anything to do with federal legal tender law. Federal legal tender is defined in Article 1, Section 10 of the U.S. Constitution. They're two different things. However, they are not entirely disconnected either. And what has happened is that some states have actually adopted non-standard UCC Article 12, and some of them are actually moving more towards the Wyoming definition, right? So we've had some debates on this committee in the last couple of years about the fact that UCC Article 12 took what we did in Wyoming, and we in 2019 on the UCC. And they clarified it and essentially recognized, because up until UCC Article 12 was adopted by the Uniform Law Commission, it had a lot of negotiable instruments. Really, all of them had to interpret whether a negotiable instrument had to be in paper form or not. And now, with UCC Article 12, they took what Wyoming did and essentially made it integral, so you no longer have to look to that addendum to understand what happens when an instrument is natively digital, as opposed to in paper form and then maybe subsequently digitized. So long story short, what's happening is that states are actually editing that UCC Article 12 because they don't want to recognize a Fed coin, Fed dollar, central bank digital currency. I will say there is a real question coming out of Washington, D.C., whether what has happened vis-a-vis stable coins in the last couple of months between the Fed and the SEC is meant to clear the runway for a CBDC. I don't know the answer to that. There is a legitimate question whether the Fed wants to issue a digital dollar and therefore is pushing out all private competition and potentially state competition too, right? So just recognize what you're walking into. But all that said, I think our UCC interpretive addendum is actually set up nicely based on my read. I can't give legal advice, but based on my read for what is coming, which is, I think, it recognizes assets like Bitcoin as money in the state of Wyoming. Now, it's not legal tender for debts, but it's money under commercial law. Therefore, to answer your direct question, gives super negotiability. So it seems like we should stick with what we've got because it's working better than what the other states are now messing with. And there is now zero probability, that the U.S. will have a uniform UCC Article 12 because so many states have gone in and edited it already. Thanks.
Thank you, Ms. Long. And I like to recognize the work this committee has done in that interpretive addendum that we worked on in Senate File 125 in 2019. I think we really did a super good job there. So please go ahead.
Thank you, Chairman. I just want to make a comment about Caitlin said. So it is clear there is plain text of statutes. Security Exchange of 1933 exempt the state from any securities for registration. It's very clear. And also, the state is exempt from money business services also. After this meeting, I can send that plain text of the law to SO office so that, and they can share with all of you. I will put that in writing. So that's why we are so excited about Wyoming State issue Wyoming stable token, because exempt from security laws and from money business services, all requirement. It's a great pathway. Thank you.
Thank you very much. I think we're getting a little bit behind our agenda here, but we really do appreciate your update and your contributions and certainly all your support for everything we've been doing. So thank you. So I think up next, we've got some bank and trust updates. I think, so I guess there was any more public comment on that, on those issues?
Yes, may I make a comment?
Yeah, please go ahead. And again, just make sure to state your name.
My name is Bob Culver. I'm a private citizen resident here in Jackson. And an issue has been raised or hinted at. I don't think it's been answered. I'd like it to be considered and answered in the future. How do people who are being paid in Bitcoin, such as for their services or their products that they're selling, get reimbursed if they want to exchange Bitcoin for hard currency or Federal Reserve notes or something like that, something they can hold in their hand, not necessarily exchange, but that's the question. Is that possible? Consider it.
Mr. Culver, to make sure I understand your question correctly, you're asking if someone is being paid in Bitcoin or other digital assets, how do they redeem that for US dollars? Is that
exactly dollars or other hard coin specie?
Gotcha. Mr. Culver, there are a lot of business models out there that offer these exact types of services where they will give you US dollars, US currency in exchange for your digital assets, whether it be Bitcoin, Ethereum, or other types of digital assets. So there's plenty of businesses that'll be more than happy to.
There are fine points that are going to come up here, and it's exact. For example, what would be the exchange rate or the fee charged for those exchanges? Thank you.
Absolutely. Were there any questions for Mr. Culver, members? Doesn't look like it. So thank you very much. Up next on our agenda, we've got some updates on banking and trust issues, and I don't see Jeremiah. Is he? He's with us in the Zoom world. Excellent. Mr. Bishop, can you hear us?
Yes, good morning. I can hear you. Can you hear me okay?
We can hear you just fine. Mr. Bishop, obviously we know who you are, but introduce yourself and you've got the floor.
Great, thank you. My name is Jeremiah Bishop. I am the banking commissioner here for the state of Wyoming, and I oversee the Wyoming Division of Banking. I apologize for not being there in person, so thank you for allowing me to show up via Zoom, and also thank you to LSO for working on my schedule. I do have a tight schedule today. And so with that, I do have a hard stop at about 11:10. I have some prepared comments for each of the issues on the agenda, but I also want to make sure I leave enough room for questions. So I'll go through my comments on for what's on the agenda. They cover open banking, banking and digital assets, special purpose depository institutions, and then the clarity on banking and trust assets for bankruptcy. Like I said, I'll go through these comments, but obviously, Mr. Chairman, I'll stand for questions at any time throughout this presentation. To start off, an update on open banking. So House Bill 62, open banking, passed during the 23 legislative session. This law directs that the banking division to adopt rules regulating the collection, use, and disclosure of customer data in open banking, consistent with all applicable state and federal laws and regulations. And rules necessary to implement open banking must be adopted on or before July 1st, 2024. So what I want to do is walk through our plan for adopting these rules related to open banking. The first step is to meet with the Consumer Financial Protection Bureau, or CFPB, to discuss their plans on final rules for Section 1033. Any rules that we make on open banking need to be consistent with applicable state and federal laws, including the CFPB's 1033 rules. Right now, the CFPB has not finalized rules, so we will meet with them to get an idea of what may be included in their rules to help kind of guide what we should include in ours to avoid any duplicative efforts or having to go back and revise rules later on once they issue their final rules. Where we are right now is we have contacted the CFPB to get going on this, and so we'll start having meetings with them going forward. The second step that we're contemplating is asking for informal comments on open banking prior to drafting our proposed rules. We haven't, again, we're still contemplating that method, that step, but once we get through with that, then the third step is to actually write proposed rules and go through the actual comment period. We plan on beginning this process early in 2024 to meet that deadline of July 1st, 2024. And as a background, we've spoken about this throughout the last interim session and during the session. Our initial rulemaking will seek to provide more detail on the notice that consumers and customers should receive prior to the bank providing access to customer data. For example, when is that notice clear and conspicuous, and areas of topics to be addressed in the notice in order to adequately cover collection, use, or disclosure of customer data. Obviously, one of the things was during the last session was making the rule making July 1st, 2024. And so obviously, if there's any additional changes made to open banking law during the next session, that will give us time to incorporate those changes into our final rule. So the next topic I wanted to touch on is just banking and digital assets. I know there's some, I also provided a, oh, sorry, go ahead.
Bishop, real quick, I think that the co-chair has a question for you.
Yeah, briefly,
Yeah.
and thank you, Jeremiah. And on that point, one of the things that hopefully we can get from you maybe for our final meeting or ahead of that final meeting is if you do see any necessary statutory changes as part of the process through this year that you're undertaking, contemplate a timeline where we would have enough time to put together the legislation to make those changes to add to the open banking statute ahead of the additional rulemaking. So I hope that's part of the contemplation to ensure that we've got a good timeline there and can meet those interests.
Yes, thank you, Mr. Chairman, Mr. Co-Chairman. Yes, that is definitely on our list also, and it is our goal to get that at least an idea of what that will look like prior to the next meeting, to give you all advance notice so that you can make any changes necessary.
Thank you. Mr. Bishop, also, I just wanted to maybe piggyback a little bit off the good co-chairman's comments. The feds move at their own pace. I'm sure that CFPB does as well, but just maybe keep us apprised as those consultations continue, so that way we can kind of maybe try to adjust the dialogue, what's needed and what you need, so we can be there to if there's additional legislation necessary to make this work for you guys. So just please do stay in touch on those consultations. Please proceed.
Yes, thank you, Mr. Chairman. Yes, most definitely. That's something we can definitely keep in touch on in the interim between this meeting and the next meeting. So the next topic, banking and digital assets. I did see the memo LSO provided, and this is a very broad topic. So I'm going to have a few points, but then I expect there'll be some questions later. Right now, Wyoming community banks, they have limited exposure to digital assets. Again, we're talking to traditional banking or banks in Wyoming. This exposure is generally limited to a few banks with just a few digital asset industry customers who have deposits or loans with those banks. Now, there's been more activity on the federal side of things with banking. So on January 3rd, federal banking agencies issued a joint statement on crypto assets risk to banking organizations. And then on February 7th, the Federal Reserve Board published a separate policy statement as a final rule. Some of the key points of this statement and rule include a highlight of risk, key risks associated with crypto assets and crypto asset sector participants, holding crypto assets as principal on balance sheet in any even de minimis amount, and issuing stable coins on an open, public, and or decentralized network or similar system is highly likely to be inconsistent with safe and sound banking practices. And then the agencies have significant safety and soundness concerns with business models that are concentrated in crypto asset related activities. There's obviously been a lot of motion in the banking industry the last several months. Some of that's been talked about right now, but there's been several bank closures. And some of the reports we hear is since the closure of Silvergate Bank and Signature Bank, that there have been reports of difficulty of digital asset companies obtaining and keeping reliable banking partners. I will say these are reports I've seen. I have not heard anything from the traditional Wyoming chartered banks about this matter, but that's mainly because the digital asset exposure to those Wyoming chartered banks are very limited to begin with. I do have one of the comments made was kind of the tie of these recent bank failures and digital assets. And I believe the representative from Senator Lemis's office said it very well. So far, there hasn't been any direct relation between the banks that fail being caused by digital assets. I think there's quite a few reasons for those bank failures. They stem from just overall poor risk management practices, excessive growth, poor interest rate risk management practices, which kind of created a very large unrealized loss position in their bond portfolio, having a concentration of deposit base, primarily as SVB Bank, was highly concentrated in venture capital. And then just the current use of social media kind of creating runs on those banks that had tight liquidity positions due to poor risk management. So overall, I think there's a lot of information that's being published by federal agencies and those applicable state agencies on the cause of these bank failures. We're still digesting those, but right now, I don't think there is a direct relationship between crypto assets and those failures. Before I move on to the next topic of a special purpose depository institution, I'll stand for any questions on that topic.
Committee members, any questions?
Mr. Chairman.
I would certainly like to state that if Senate File 125 and the regulations that it required of our banks was in place at the federal level, we certainly would not have seen some of the stuff that we've at the national level in terms of capital requirements being 100% matched on deposits and other things. So kudos again to the state of Wyoming and the work that we've done. So Mr. Co-Chairman, please.
I just wanted to note that for those listening also for updates on the banking, that we have an excellent memorandum available on the website that Clarissa Nord put together regarding the recent bank failures and impact on the cryptocurrency sector. So wanted to highlight that.
Absolutely. The folks listening online, you can access that at wyledge.gov under the meeting materials, and I highly encourage it. Any questions for the commissioner on this topic? Commissioner, please proceed.
Great, thank you. So the next topic, special purpose depository institutions. So the division, we're continuing to work with the current SPDIs to make progress on launching products and services and starting operations. We've been working on helping ensure our SPDIs meet the requirements in our statutes and rules before offering digital asset custody. Another topic that we spent a lot of time on is we've reached out to other states that may require an SPDI to obtain a money transmitter license to discuss how the SPDI can appropriately open deposits for residents in that state and how they can use the term bank in their name. Generally, these issues in these other states come from the lack of federal insurance and in some cases, the prohibition on lending. Our goal in meeting with these states is to identify the states where there's ambiguity on how SPDIs can operate, understand the perspective of each state regulator, and if an SPDI needs some type of license in that state, at a minimum, ensure we can cooperate on exams to make regulation more efficient. Right now, we have met with the majority of the states we've identified where there's either some question on whether or not they need a money transmitter license, and we've held meetings with a lot of those states. This is a state-by-state issue. We're encouraging our SPDIs to definitely reach out to these states as well, because they may need to go through a license process in those states. That's all I had for the SPDI topic. But again, before I move on, I'll stand for any questions.
Thank you very much, Commissioner Bishop. Members of the committee, any questions for the commissioner?
Mr. Chairman.
Ms. Co-Chair, go ahead.
Do we have any SPDIs currently in queue to get their charter that is public? And if so, who are those companies that are publicly in queue? We may not.
Mr. Bishop, go ahead.
Yeah, thank you, Mr. Chairman, Mr. Co-Chairman. Yeah, we don't have any official applications. We do have a public notice that is made once those are accepted. I will say we do continue to meet with potential applicants on a fairly regular basis, people that may be interested in the charter. So there is still interest and we still are meeting with them. It hasn't slowed down. It slowed down, I said, a little bit, but we still are seeing interest in that area, but no official applications at this time.
I'm sure as usual, there's always lots of informal interest, but no official applications submitted. Again, committee members, any questions? Is there any,
Mr. Chairman?
or Ms. Co-Chair, go ahead.
Well, I know Mr. Bishop wants to, he's got a hard stop at 11:10. So I know we were planning on getting to our Speedy Bank public comment at this point. Maybe we should skip to his comments on clarity of banking and trust assets real quick so we can get him free and then roll back and touch base again with the Speedy. Does that make sense?
Yeah, no, Mr. Co-Chair, I think that makes great sense. So, Mr. Revelle?
Yeah, thank you, Mr. Chairman. So this is a question that deals not with what you own, but how you own it. And prior to Celsius, BlockFi, Genesis, FTX, there were few in the digital asset space that were paying attention to this question. And same with on the banking side, prior to SVB, Signature, First Republic, few in the traditional banking space were paying attention to this. But as our colleague Ms. Long wrote a while ago, what the world is waking up to is the fact that a bank deposit is an unsecured loan to a leveraged counterparty. And this is true of the digital asset lenders and exchanges that have failed as well. And so that the alternative to this for consumers and investors in both traditional assets and in digital assets are legally segregated accounts or custody accounts, which allow that assets can be held on behalf of customers and remain owned by customers and not commingled with bank balance sheets or other financial institution balance sheets. This exists in the US today and in Wyoming, but it's not perfect. Federal bankruptcy law provides for segregated account assets that are in receivership to be, under certain circumstances, to be clawed back into a bankruptcy estate in the event of failure in receivership. And the Wyoming statutes, as I understand it, also provide for the bank commissioner in the event of receivership to defer to the bankruptcy court with those assets. So Switzerland has enacted legislation which makes very clear that legally segregated accounts, or as they say, assets held in title, may not be pulled into bankruptcy estate, may not be commingled with the institution's other assets or their own balance sheet. And they further clarified this legislation by specifically adding digital assets. The challenge here in the US is that bankruptcy law is federal and would preempt anything that we could do at the state level. But from my understanding in conversations with folks who are experts in this matter, there are ways that we can get 98% there by clarifying what Wyoming's intentions are with assets that are held in custody or assets that are held in legally segregated accounts. And that might perhaps compel a federal bankruptcy court to respect that was the intention all along. So that's the question that I wanted to raise with the committee. Thank you, Mr. Chairman.
Mr. Bell, I think that raises a great point. I know that there have been some discussion about that Swiss model where it's on the balance sheets. These assets are isolated. They are not, eligible or subject to certain proceedings in those in the event that those bankruptcy proceedings. And so I think it's a really good comment. I would certainly be interested in hearing what the committee has to say. I mean, I know when we start tinkering with bankruptcy proceedings and statutes and trust stuff, we got to proceed with caution and make sure we're not upsetting any apple carts. But I think if there's things that we can do to give heightened security and certainty to private entities, to people on the that their assets are safe and they are secure in times of volatility, and that they have to go into some of these bankruptcy proceedings, that type of protection. Certainly, if I was that person, I know I would certainly appreciate it. So I think at least having that discussion about what that looks like in terms of amending our statutes is really warranted. So, Mr. Co-Chairman, do you have anything you want to weigh in on that?
Yeah, Mr. Chairman, I was intrigued by the idea, and when you start thinking about it, it almost seems like, well, how could that even possibly be the case? But apparently it is the case that assets that are the owner's assets that are then being custodied by a financial institution somehow are swept in to a bankruptcy. It's almost surreal that would take place. And again, it's my understanding, as is Mr. Reville's understanding, that we don't have total control of this, that it ends up in the federal bankruptcy court, but that perhaps there are things that we could do to strengthen that and to take it to the greatest extent that the state of Wyoming is allowed to separate those assets and ensure that an individual's assets remain their own, and perhaps do that expeditiously or quickly and set up that delineation. And this is where, I'm curious to hear Mr. Bishop's views on what we can do. Because the other challenge is, even if you get your assets back, if they're swept into a bankruptcy court, then they're tied up, which is obviously, so at best it's inconvenient. At worst, you lose some of your assets, and neither of those things is going to be a good outcome. So yeah, I'm interested in learning more from Mr. Bishop, and maybe exploring some legislation that can clarify to the greatest degree that we're able to clarify that assets held in custody are not to be included in a bankruptcy where we can.
Thank you, Mr. Co-Chair. Commissioner Bishop, you mind weighing in? Obviously, in these kind of proceedings, you have a peculiar and interesting role in them. So we'd love to hear you weigh in.
Yes, thank you, Mr. Chairman. Yeah, this is a good conversation. And so what I'll do is kind of go through our understanding of how things are currently. And then I can kind of address kind of what you're discussing now at the end. So first off, trust assets, customer assets held by a trust company. So customer assets, including digital assets held by Wyoming supervised trust companies, are not assets of the trust company. The supervised trust company must keep its customer assets separate and apart from the assets of that company. And according to Wyoming law, if a supervised trust company fails, it does not necessarily go into federal bankruptcy. Rather, again, under Wyoming law, on a failure, myself as the commissioner apply in state court to be appointed receiver for liquidation or rehabilitation of the supervised trust company. And then Wyoming law sets forth how my office would handle a receivership of a trust company, which occurs with approval of a state court. But again, I reiterate that the customer assets are not assets to the trust company under Wyoming law. So again, those comments fall under Wyoming law. But there is a potential area of ambiguity caused by federal law with how trust assets are handled when a trust company fails, this is not something that's unique to just Wyoming. This is among all states. So federal law includes several types of entities which are exempt from federal bankruptcy processes, which include, for example, a bank, which is expressly exempt from being a debtor under federal bankruptcy code. But a state chartered trust company is not expressly exempt under the bankruptcy code, despite numerous state laws giving the power to a state financial regulator to handle the failure of these companies, Wyoming included. So thus, when the insolvent entity is a state chartered trust company, whether it's in Wyoming or elsewhere, some parties may claim that the state chartered company is not excluded from federal bankruptcy code. I will say in some cases, the state chartered trust company has been considered a bank for that exemption under federal bankruptcy code, but not in every case. There's definitely been cases where that is not made. So if in federal bankruptcy, how the customer asset is treated is determined by that federal bankruptcy court. But I still believe those customer assets should be treated as separate and apart from the Wyoming Trust Company, given the Wyoming law is what it is. So as that person that's charged with carrying out Wyoming Trust Company statutes, I am obligated to carry out my duties as a receiver of a failed company under Wyoming law. And I would definitely argue if this were to happen, I would definitely make the case that those assets are assets of the company and should be exempt from that bankruptcy. But there could be a situation where the state where I make that stance. And it goes through the receivership under our law, but there may be other parties that seek for those assets to be go through the federal bankruptcy law. So it is under question. A lot of it is state issue versus federal issue. So that's trust company assets. This is a little bit different with a Wyoming bank. So Wyoming banks are allowed to have trust departments. And like a Wyoming trust company, if a bank failure happens, it does directly need to be receiver of that bank. However, I would direct that to the FDIC. That is the normal process. So I'd say it's much clearer for a bank with a with trust assets on how that is handled, mainly because there is that bank exemption under federal bankruptcy law. So again, that's a little bit different depending on where those trust assets are. Hopefully that answered some of your questions. I will say that that's how it's currently handled. If there is anything that the legislature can do to clarify that those trust assets are assets of the customer and should not go through federal bankruptcy and be kind of mingled with company assets under the bankruptcy, I would definitely have no objection to that. I'd definitely be curious to see if and what this committee and legislature can do to address that problem. With that, is there any questions kind of with the comments I made?
Mr. Bell, please go ahead.
Thank you, Mr. Chairman. Thank you, Mr. Bishop. Just a question regarding I don't know if it's a statute or a rule that I referenced earlier regarding the commissioner's ability to bypass the sort of trust receivership model and direct it to the court. My understanding from conversations with you, sir, and with your predecessor were that was a matter of operational convenience or practicality, that there may be a situation where the state wouldn't have the resources to manage a receivership. But I'm curious how important that is and whether that's sort of sacred to your office or something that could be part of this discussion. Thank you, Mr. Chairman.
Mr. Commissioner?
Yes, thank you, Mr. Chairman. Mr. Revel. Yeah, I think some of those comments, it depends on whether or not it's Chapter 7 or Chapter 11 bankruptcy. I know there is a difference, so maybe that's kind of where those comments came from. I do know, I think with trust company, majority of a trust company failure, we would have to go through the kind of process I described, which is, I think, very beneficial for the trust asset customers.
Mr.
Co-Chairman.
Ms. Long has a question.
Or sorry, Ms. Long, please.
Thank you, Mr. Chair. Commissioner Bishop, question. In the event that there is a receivership of a trust company in Wyoming by your department, who pays the receivership cost? Is that the Wyoming taxpayer?
Commissioner?
Yes, thank you, Mr. Chairman, Ms. Long. Yes, so our agency, we would pay for that. We do have a resolution fund already set up. I think a few years ago, we started funding that. So part of our annual supervisory fees from trust companies do go into that. However, we would basically be running the trust company. And so we would be using the company's assets to help pay for that. Again, that's the company's assets, not the trust assets.
Ms. Long, any follow-up? Mr. Bell?
Thank you, Mr. Chairman. I believe that Ms. Long as well, the regulatory capital requirement is meant to cover that as well, but perhaps Chairman Bishop could clarify that for us. Thank you, Mr. Chairman.
Mr. Bishop, please.
Yes, thank you, Mr. Chairman, Mr. Ribble. Yeah, that is also a point. So under Wyoming law, public trust companies have a required $1 million capital pledge or surety bond. So of $1 million. So they have the option to either do the surety bond or capital pledge to our office. So that $1 million pledge, again, that's the company's assets, not trust assets, but the company's assets are pledged to the office or my office to be used to cover that cost of receivership.
Ms. Long, go ahead.
Thank you, Mr. Chairman. Just a clarification, the capital requirement that the Speedies have, which have to pre-fund their resolution costs, is far higher than $1 million. Maybe could you, if you had to take a trust company into receivership, do it for $1 million?
Mr. Bishop, please.
Yes, thank you, Mr. Chairman. It's long. Yes, that is correct. The SPDI capital pledge is significantly higher than that $1 million. I don't know what the exact cost is to put a trust company in a receivership. Luckily, that does not happen very often. I think there's only been a few in the entire country over the last decade. Likely that $1 million may not be enough. It kind of depends on the size of the company, the nature of those assets, or those accounts that we're trying to send and find successor trustees for. A lot of it really does depend on the specifics of the company. So that's hard to say definitively. Also, just to point out, with the SPDI having much higher capital pledge versus the trust capital pledge, we do have a resolution fund like that I mentioned before set up to cover the cost of trust company receivership. I will say we do not have that same type of fund set up for an SPDI.
Thank you, Commissioner. Commissioner Bishop, we're at about 11:11 right now, so it kind of sounds like you got to take off on us, but I really do appreciate your testimony and the dialogue here. I think this is how we flesh out these good ideas and, if anything, what should be done. So thank you very much.
Yes, thank you. Thank you again and again. I apologize for having the tight schedule. I'm actually on the East Coast attending quite a few meetings this week. But thank you for letting me join remotely. If there's any questions that come up after I leave, I'll definitely be watching the video and we can address things hopefully before the next meeting. So thank you again.
Absolutely. Thank you. Mr. Ravel, do you have any follow-up to that or just kind of general thoughts, discussion, ideas?
I do not, Mr. Chairman, have any additional ideas other than maybe just restating from my opening comment that I do believe there may be ways that we can strengthen the intentions of the state to have these assets clearly segregated in the event of bankruptcy. But I defer to those with the more of a legal mind than mine to exactly how we might do that.
Mr. Co-Chair.
So in the interest of staying on schedule, I think this is a topic that we should include on the agenda next time and ask that David explore statutory revisions that we can put in place that strengthen to the greatest degree possible this separation of assets and basically, how far in statute can we go to strengthen that separation, take it there to the greatest degree possible and get that drafted. I think that would be worth looking at for next time so that we can ensure that if there is more that we can do to ensure that those assets they don't end up in a federal bankruptcy court. Let's take it as far as we can. I don't know if anyone has any concerns about that, but that's what I'd like to see happen is for us to potentially have what would in theory be a short draft with Commissioner Bishop working with LSO to figure out how we can strengthen it.
Mr. Co-Chair, I think that's a really good point. I guess my concern or my tack on would be, how comfortable is LSO, David, are you guys with it? Because I think it's saying, hey, how can we strengthen the protection for trust assets? That's a pretty broad question. So are you okay with something that broad, or do you need us to refine it more down to more concrete directives? So where's your comfort level?
Mr. Chairman, at this point, without having had a chance to really dive into it and look at what the options are, I can't give a solid answer. Certainly, having the opportunity or option to reach out to others who are experts in the field and who could contribute to that conversation would be helpful. There is a bit of a gap in time between our next meeting. So if the committee would like, we'd absolutely do that. I don't want to say we need a working group because that, has mixed results. But if there's anybody in particular you want us to work with, that would be helpful. Anybody that you can identify that we can reach out to and say, hey, here's some issues, thoughts on that, that would also be helpful.
David, you kind of touched on something that I was tossing around, is the idea of kind of having, perhaps a working group that does meet maybe once or twice between now and our next meeting. Maybe members who are on this task force, maybe pulling outside ones, because I agree. I think without really getting in depth on the procedure at the state level, as well as that dance between federal bankruptcy code, what does that look like and what opportunities are there? Mr. Co-Chair, how would you feel about that option to try to refine this topic?
Well, I think we have to be sensitive to the number of meetings we have also. So I think between now and next time, we should try and dig into it, see what we come up with, put together a group. We can work with the commissioner, bring in other expertise and see what we can put together. If that ends up being something concise like a bill draft, that would be great. And I think if we can do more for banking as well, although it sounds like it might be largely sorted for banking, we should look at trusts and bank insolvency and really see what we come back with. So if we can put together a little working group, and if there's anybody that wants to participate on that working group and put some effort into this during the next span, then I think we'd welcome that. Anybody want to, don't everyone jump on board at once, but
Mr. Co-Chair, we can do we can do the old voluntold method as well.
We can do it. We can follow up with it as well and see who wants to, but I think it's worth putting some time into.
Yeah, I think it really is. We don't have to have something concrete right now, but I think that should probably be an option if we really do want to do a deep dive on this. Let's see. So let's jump back in.
Back to Speedies.
Yeah, back to Speedies. Obviously, the commissioner had to run on us. Was there any further discussion, committee members, or concerns or thoughts in general on their discussion around Speedies? Again, I love emphasizing that the FTX and those outfits had to follow the same regs that we have here on the books in Wyoming. Never would have happened, or would have been infinitely less severe than what we certainly saw. I think it's a kudos to members of this committee and the legislature. Just what a great piece of legislation that we pass.
So, Mr. Chairman, I think we have, and I think we have updates from a few of our Speedy Bank representatives that are either joining us in person, like Ms. Long, or I think we've got some on Zoom. So it'll be good to hear
I think that's
really what everyone's up to and how things are going.
Mr. Co-Chair, I think it's an excellent idea. We've got 3 folks. And Caitlin, are you comfortable going first?
Yes, Mr. Chairman.
Please proceed. You have the floor.
Okay, thank you. On behalf of Custodia Bank, which is the second Speedy that was chartered, and the second to apply for a Fed Master account, due to delays after our initial application in October of 2020, Custodia was initially told in January 2021 by the Kansas City Fed that there were no showstoppers to our application. And then delay. Custodia elected to apply to become federally regulated, to become a Federal Reserve member bank a few months later to try to speed up that process. That we applied in August of 2021. Delay. Custodia filed suit in June of 2022. And this is all now public information. After we filed suit, the Federal Reserve started to process the membership application and the master account application 2.5 years later. It is public information that there was an exam, and the exam letter was delivered to us in October, and it was not a no, it was a not yet, in the words of the examiner. And then suddenly 4 months later, the Federal Reserve blindsided us and issued a denial of both the membership application and the master account. The master account denial in part is because the speedies are not federally regulated while we were being denied federal regulation. Custodia also applied to become an FDIC insured bank and was told in no uncertain terms, no. So both pathways to become federally regulated were blocked. And we were denied because we were not federally regulated. Now, in the denial order that was publicly released, the Federal Reserve made clear that the speedy charter is not going to be accepted by the Federal Reserve. This is rather interesting because, as you know, the state of Wyoming did extensive work with the Federal Reserve itself in the creation of the charter back in 2019 and the rules in the public rulemaking process, as well as the 750-odd-page supervisory exam manual. The Federal Reserve was providing comments at each of those stages, is my understanding. I was not in those meetings, but that has been publicly acknowledged in more than 100 communications between the state of Wyoming and the Federal Reserve. So the punchline is the Federal Reserve really rug pulled the state of Wyoming in rejecting its recognition of the speedy charter. And it was more than just a rejection. I will share the circumstances of what happened to Custodia. It was such a shock. Custodia was asked, after months of work with the Federal Reserve, and as you know, as we just shared, and it was publicly disclosed, there was an exam and there was an exam letter. If the answer had been no, the answer would have been no at that time in October. It was not no at that time. It was suddenly no 4 months later in January. And what happened, we've publicly disclosed, is that we started getting press calls saying, we understand the Federal Reserve is going to vote down your application 2 days before the vote occurred. Someone leaked that to the national press. And we were getting multiple inquiries from the national press for a statement. And because we had not initially engaged with the press was so eager to get a comment from us that we have it in email that they knew that the applications to the Federal Reserve and the Office of the Comptroller of Currency that had crypto in their business plan were simultaneously asked to withdraw their applications. It was coordinated, and we have evidence of that. Moreover, when Custodia sent its letter, because we were asked to withdraw the application, when Custodia sent its letter to the Federal Reserve's General Counsel, within hours, a reporter was recounting that letter back to us. And we calculated 17 hours later is when Custodia was voted down, and an 86-page order was voted upon. So, and that included an overnight 17-hour period. It is not clear to us exactly how long the governors had to review the 86-page order, because it was pushed through. Now, it was pushed through during a Federal Reserve blackout week, a week before the FOMC meeting, and simultaneously announced along with a White House announcement. There were 2 anti-crypto policies or statements released at the same time, one by the White House, one by the Federal Reserve, and the denial of Custodia's application, all at 11:30 a.m. Eastern on the same day. Then, precisely at 2 p.m., 2.5 hours later, Custodia received the denial from the on our master account application from the Kansas City Federal Reserve, And it is public information that that afternoon, the Fed moved to dismiss the lawsuit. At the time, it was not clear that it was not clear to the outside world that this had just how coordinated this all was. It was clear to us because again, we had it in email and we had the reporters telling us that this was all coordinated and confirming that it was coordinated with the White House. But it is now crystal clear in retrospect that this was an all of government coordinated effort to move against this industry, because the next week is when we started to see the SEC movements, the IRS started moving, the CFTC started moving. We've seen now Department of Justice actions. I want to make clear that I think huge swaths of this industry are criminal, are fraudulent, and need to burn on a raging funeral pyre. Okay, but what has happened is that those of us who were trying to create a regulatory regime that would have prevented the FTXs of the world from happening were also swept out. The baby has been swept out with the bathwater. I cannot comment on the lawsuit other than to say it is still proceeding. Thank you, Mr. Chairman.
Thank you, Ms. Long, for the update and for that extra passionate one as well. We appreciate it. We certainly share your passion. I think we've got some other speedies that are interested in making some remarks. Who do we have in the Zoom world on deck? Excellent. Ms. Fellows, can you hear us?
Yes, I can.
Excellent. We can hear you okay. We know who you are, but if you wouldn't mind, just for the record, just state your name and who you're with, please.
Sure. I'm Julie Fellows, and I am the CEO of BankWise. We were the third speedy to receive our charter, and I want to say thank you for inviting me to present today. I want to start by recognizing the genuinely excellent work that's been completed over the past 4 to 5 years in creating the infrastructure to enable blockchain businesses and the blockchain economy to grow in Wyoming and across the country. Recent events in the banking industry highlight the sound and thoughtful approach taken to structure the speedy entity as a full reserve bank. The comprehensive regulatory framework and thorough supervisory oversight is unquestionably the most advanced and well-developed structure in the US that's in supporting blockchain technology and digital assets in the financial system. Unfortunately, your work and our work is not done. Wyoming must work to educate other state regulatory bodies as well as the federal regulators to help ensure that speedies are able to open, thrive, and serve the critical role intended, that of a safe, compliant financial institution providing banking and qualified custody for the blockchain ecosystem in Wyoming and across the US. The blockchain economy needs the speedy's critical infrastructure to develop and grow. Recent headlines suggest that no speedy will ever be able to obtain a master account from the Federal Reserve. These headlines do not take into consideration differentiation in business models, risk profiles, and leadership expertise. However, it's really important that Wyoming supports all of the granted charters and their individual business models and distinctive purposes. These headlines have not been helpful or have not been highlighting Wyoming in the positive light that really should be because of the work that you've done in creating this infrastructure. It's important that the financial, fintech, technology, and congressional communities understand the extraordinary framework and the value of the Speedy Charter. It's critical for Wyoming to communicate that blockchain technology is not just about crypto, but is the technology upon which the next iteration of financial services will be built upon. Policymakers at the federal and other state levels are taking a very reactionary approach, rather than one from an informed position. I compel you to work with these communities, educating and marketing the important work that this committee and the Wyoming legislature has accomplished to ensure that it's recognized and valued and can support the growth of this industry in Wyoming and across the country. So specifically, the select committee must collaborate with the Kansas City Federal Reserve to help them become comfortable with speedy supervision, focus efforts to meet with New York and other state regulators to ensure that speedies are recognized and treated appropriately across all 50 states. And I know that Commissioner Bishop has been doing some of that work, and I think it's really critical that this committee also support those efforts. And that the Select Committee and the Division of Banking needs to be attending and presenting conferences on behalf of Wyoming and the speedy regulatory structure, positively promoting this incredible framework. We see New York DFS, the CFTC, the SEC, and many others at events across the country, and we're really not seeing Wyoming talking and educating about the incredible structure that's been created. So with that, thank you for listening to me, and if you have any questions for me, I can answer those.
Thank you very much, Ms. Fellows. We certainly appreciate your testimony. Committee members, any questions, Ms. Wise, Mr. Co-Chairman?
Thank you, Mr. Chairman. Thank you, Ms. Fellows. I appreciate the thoughts, and I was going to ask, and you had it towards the end of your chat, what we could do to help moving forward. It sounds like education is one component of that, trying to find ways to educate national community, other states. And, you know, I appreciate that thoughtfulness. We do need to find ways to do that better. That's not something that is traditionally a strength of a state government. It's kind of that marketing side of things of getting a message out is not something we traditionally do well, but this is a space where we probably need to find ways to do that. And I think we can all participate in that. Is there anything else that we need to strengthen? Anything else that you see, whether it's in the statute, whether it's in the Division of Banking, or anything else that we can and should be doing better to make your job easier and make your work more productive?
I appreciate
Ms.
that.
Fellows, please go ahead.
Thank you. You know, I think I would just reiterate the fact that Commissioner Bishop has been working with other states, but I think that is not an easy thing for him in that role. I think that some additional, I don't know if pressure is the right word, but certainly some interaction at other levels across the states and certainly at the federal level to help the entities and the people within those entities really understand the benefits. Again, I think that the infrastructure that has been created and the regulatory framework is very sound, and it's just not well understood. So, you know, New York DFS comes to mind because they're really pushing that they've got the standard that is the best. And I would really argue that the speedy structure is much stronger and supportive of a very safe and compliant entity, which can help to grow a safe industry here.
Great, thank you.
Anybody, any further questions for Ms. Fellows? I did, Ms. Fellows, have one question for you. You mentioned just about that stronger collaboration with the Kansas City branch.
Yes.
Could you maybe go into a little more detail of what kind of collaboration you have in mind, or what you imagine?
Sure. I believe that as the primary regulator for a speedy, the Division of Banking is supportive in our process, but I do think that helping the Federal Reserve to understand the commitment and the strength really of what Wyoming has put together, and the fact that these entities will be supervised very closely, and we must meet the highest regulatory standards. There will be, very, very strong AML, BSA and know your customer requirements, so that the concept that these entities would be introducing additional risk into the system is really not accurate. A well-regulated SPDI providing services in the industry is really going to enhance the safety and security. And they just don't, I would just say that especially the federal regulatory bodies do not seem to understand that at this point.
Thank you, Ms. Fellows. I certainly agree. They definitely do not seem to understand that. I think we have some folks here who would agree as well. But point well taken. We really appreciate your testimony. Any last call? Any questions, committee? Well, thank you very much, Ms. Fellows, for your testimony.
Thank you.
I think we've got one more on deck is Corey Reeson. Oh, in person.
Here with us in person.
Phenomenal.
Hey.
Thank you. We like that. And we know who you are, but just state your name and who you're with, please.
Good morning. Corey Reason, CEO of Commercium Financial.
Excellent. And just not that I think I've seen you before at these hearings, but just everything goes through the chair. It's just kind of just legislative protocol. But please go ahead. You have the floor.
Yeah, no problem. Thank you, Mr. Chair. I guess I'd first like to just thank the state of Wyoming and this committee for the work that you've done. I do believe Wyoming is a leader in the space across the United States and actually globally. I do spend a great time abroad and I've observed a lot of the other regulatory frameworks, and I do think Wyoming is leading that way. Secondly, we did submit some material for your committee's review. I'm not going to speak to that. I'll just take it as read and allow questions if you guys, well, I guess you'll allow questions, but I will answer questions if you have any questions. Third, the one issue I wanted to speak on was just about correspondent banking. So I know my fellow CEOs have run into similar issues. We do have several promising conversations ongoing. We were actually very close to signing an agreement, and it was pulled at the last minute due to federal intervention from the FDIC that said it would introduce risk into their business model if they allowed an SPDI to bank with them. That being said, I was notified this morning, the US branch of a European bank that I'm very close with has opened the door and is open to allowing us to have a correspondent relationship. And I'm going to London in a week and a half to go meet with their global head of correspondent banking. So although it is a US institution, since it is a group entity, it does require the mothership's approval in London to sign off on that. With that, I'm happy to take any questions. That was the primary update I wanted to give.
Mr. Co-Chair.
Thank you. And we do have the materials and have looked through them, but I think just for the standpoint of those watching, and if you just walk us through briefly kind of where you are, what your future looks like, current progress, and again, a lot of that is in our update, but I think it would be helpful to have that opportunity to hear from you.
Yeah, no problem.
Please go ahead.
All right, thank you, Mr. Chairman. Yes, so we do have our charter, and we are in the process of working, and I'd like to give Commissioner Bishop and his team a lot of credit. They're very good people to work with as we navigate through the certificate of authority process. I believe there were 38 items as part of that. Many of them are operational in nature. Some of them are policy, procedure, governance related, and then there's a number of financial related items. I'm happy to report the overwhelming majority of the operational and governance items are done to date. They, of course, will need to be validated by the state as part of the operationalization component. And then really my job in the last 5 months or so has been fundraising. Which I'm sure all of you can be aware that raising money in the equity capital markets at this point in time is not good. However, because Wyoming does have such a robust regulatory framework, it is a very good talking point to any of the investors that I speak to on, you would never have to worry about your assets being tied into a bankruptcy estate. The fact that we don't do leverage lending or other activities that would put your assets at risk, all do make for very good talking points. So we envision opening at the end of the third quarter into the fourth quarter, very dependent on kind of the capital raise perspective. We have looking to probably to another 5 to 10 people to be hired in Wyoming. Obviously with a preference towards Wyomingians, is every country that I've ever worked at, I've always attempted to hire locals and, to fill as many roles as possible. I think it really shows that you've got a commitment to the locality wherever your office is at. I'll pause and see if there's any questions. I kind of walk through a lot of the material that's in there.
Let's go. Or so, Mr. Ravel, please.
Yes, thank you, Mr. Chairman. Just curious if the activities that you have planned require the Fed master account, or if you can proceed. You referenced the correspondent bank earlier, so I presume that means that you're proceeding without those payment rails set up. Thank you, Mr. Chairman.
Mr. Reason, please.
Yes, thank you, Mr. Chair. Yes, our first day order of business is really just looking at digital asset qualified custody with some traditional banking services, but it's very vanilla. We took a look at our business about a year ago and kind of looked and said there are a variety of avenues we could go down. We said, let's keep it somewhat simple and try to be the least controversial, at least a product offering from this space. When I talk to colleagues out in Wall Street that I used to work with, one of the things is, the larger banks have some degree of interest, I think, in custody, but a lot of them are housed in legacy trust companies, depending on what the SEC rules, on qualified custody in the future. There's the potential that they'll have to spend a great deal of money transitioning things out of those legacy trust companies and into new standalone organizations kind of within these massive financial corps. So we thought it was just a good spot for people that feel that their money could be safely, but their digital assets could be safely deposited places where they wouldn't be encumbered in potential bankruptcy.
Mr. Ravel. Mr. Co-Chair, please.
Thank you. And, I'd ask the same question that I asked Ms. Fellows to you, Mr. Reason, which is, is there anything that from your perspective, we, the state of Wyoming, should be looking at, whether it's in speedy space and in terms of facilitating that so that it works better, or digital asset space? What governance needs do you have that may be unmet?
Mr. Reason, please.
All right. Thank you, Mr. Chair. The good thing about batting cleanup in this group is between Ms. Long and Ms. Fellows, they covered a great deal of items I would have spoke about. The one thing I think is if you look across the committee and your fellow civil servants, I'm sure all of you are very aware of the benefits of the SPDI regulation, Wyoming. Advocacy, I think, is the biggest thing, and having a more public presence. So some of the localities that I could reference, Switzerland almost always has somebody from their trade reps office or somebody from financial innovation that attends a lot of these large financial services conferences. They utilize their ambassador services quite heavily in Washington to push for innovation, in bilateral agreements. Obviously, I don't expect Wyoming to do that, but I do think where there is opportunities, I would use a good example like the ABA event in Miami. That's a big cross section of financial services, both traditional and digital, and they should hear that Wyoming has the legal and regulatory framework available. From my perspective, I think within our organization, we're well provided for by the governance and legal structure in Wyoming at the moment. We have previously provided some thoughts to the commissioner, and I believe he's passed those along through his general counsel. But I think really just education and advocacy is the big thing that I could ask for. Thank you.
Thank you, Mr. Reason, Co-Chair. Committee members, any further questions? Mr. Reason, one question I did have was, assuming my memory serves me correctly, was that in our speedy legislation, it did allow for some of this leverage lending with the explicit consent of the customer. Ms. Long, I think that was in the final form, or they have the ability to do that, correct?
Yes, Mr. Chairman, but not on the bank's balance sheet. This would be akin to securities lending. So it's an asset under custody that the speedy, as effectively a directed trustee, could lend on behalf of the customer, but it's not the speedy making the loan. The speedies are prohibited from lending.
Correct.
It would have to be matching a borrower and a lender outside of the speedy itself.
Right. Mr. Reason, my question is, how developed is that specific model in terms of, how developed is it? Is it pretty robust? Is there a pretty standard format? Is it still pretty new in regards to the digital asset space?
Yeah, in my experience, it's developing. It's not something that we've looked at for kind of our day one. One of the messages that we've sent to all of our investors, no leverage, no lending, 100+% reserve across the board. I think it's something that it would, we'd entertain in the future. I think the markets also have to get a little more mature in that space. It's, as Ms. Long alluded to, it's only good if you can kind of match up the counterparties. In that sense, you can't do it yourselves. And so it does introduce a degree of complication. It's, for lack of a better word, it's closer to almost a peer-to-peer marketplace that you have to build and arrange for. So it's something that I'm happy to take a look at, but I've not directed anybody on my team to kind of move forward with.
Thank you very much. Sounds like my question's a little cart before the horse, but certainly interesting, no less. Committee, any further questions, Mr. Reason? Well, thank you very much for your time.
So much.
Really appreciate it. I think that pretty much, is there any public comment? Please go ahead.
We've got a gentleman back there too.
I think,
Thank you, Chairman. My name is Xiaomeng Zhou, and American Crypto Fed DAO's one of the organizer. Speedy Bank is great. We may save this country. If you look at today, the U.S. Treasury, the Department of U.S. Treasury is a competing deposit with a commercial bank. They pay short-term more than 5%. So if it lasts a little bit longer, a lot of commercial banks will have problems. So that's probably a self-destruction of fractional banking system. That's today's Federal Reserve system, monetary system. Speedy Bank is a fully reserved banks. So this fully reserved bank, if this committee open this to more, like the state bank or any bank operated in Wyoming, a faster track to have speedy banks, and make some way they can help the token holders, like Wyoming stable token holders, to lend to borrowers. They are in between and do the due diligence of the borrowers. Of, okay, this can be much more important when the fractional banking is clapping. There are a huge problem today. Thanks for this memorandum of recent bank failures and impact on the cryptocurrency sector. This memorandum is great. We had a Silicon Valley Bank. We had a lot of problems. Yeah, we know them. And Scott had the First Republic Bank. So in California, we always experience all of this. So when we look at the Speedy Bank, the fully reserved bank, they will be the future. They, in this digital blockchain world, they can connect lender and borrowers. And without those fractional banking and business cycle come back and destroy the whole industry. Okay, and the bank also. It's hard to believe the U.S. Department of Treasury is competing with commercial banks. Okay, so this is a terrible situation we are experiencing. So we hope this committee can take a next step, make sure the Speedy Bank can lend and bridge all the lenders, individual token holders, Wyoming stable token holder to the borrowers. And when the commercial bank today, under today's situation, they stop lending, the whole economy will have huge trouble. So thank you.
Thank you very much for your testimony. We appreciate it. I think we've got, real quick before I let you go, let you testify. I'd like to recognize a distinguished guest, Mr. Andy Schwartz, former legislator from Teton County. Thank you for gracing us with your presence.
Thank you, Mr. Chairman. It's a pleasure to have you here.
Please go ahead.
Thank you, Mr. Chair. Thank you, Mr. Chair and committee. My name is Michael Hiles. I am the CEO and founder of 10XTS, 10XTS. We are the software company that kind of incubated Commercium Bank. And we did it more so from a perspective of not banking crypto and cryptocurrency. We found that the technology provided a wonderful opportunity to apply towards the modernization and the improvement of market infrastructure for capital markets, particularly with respect to the settlement and clearing of secondary market transactions of traditional securities. And if you're in that space, you know that it's kind of a mess. And I think that this was even recognized by the CEO of Blackstone Group back in December when Larry Fink sat on stage and articulated his vision of the future where securities could settle in real time. And he went on further to say, beneficial ownership could be calculated in real time at the trade level. And that's in fact the technology that we have worked to produce to backside with the Commercium Bank from a qualified custody standpoint. And so for us, it was really about how do you achieve that last mile of custody that's necessary to bring these improvements to market infrastructure for the 15C3-3 qualified custody of traditional securities that just so happen to ride on a different technology rail. And the problem for us has been the conversation has been overshadowed by the cryptocurrency conversation, and it's very difficult to distinguish between that which is crypto, Bitcoin, and stable coins and all of these things versus blockchain Web3 technology that allows for a multi-party settlement on a real-time basis between an alternative trading system or an execution broker, the custodian, and the transfer agent, even in a public security standpoint, reporting securities. And so we feel like we've got all of these pieces in place now. With the no action letters that have been submitted by the SEC, even there is fairly decent regulatory clarity for user self-directed transfer of traditional securities by way of the FBO qualified custody rail. It's just a matter of time and sorting it out and continuing that education process. But I wanted to be clear with the committee here that it's not just about cryptocurrency. It's not about stable coins. It's about the amount of capital erosion that takes place when you have the monolithic traditional centralized securities depository institutions like CDN Company and Depository Trust Corporation that are taking a big rake out of the market every day. And through this process and the wonderful legislation that Wyoming has passed and worked to present, the opportunity to really decentralize securities depository from a records management. I know you think about what does DTC really do? It keeps track of margin positions and clearing at the end of the day. And it's really about the facilitation of interoperability of records between institutions. It's pretty easy to move a token from wallet A to wallet B, institution A to institution B. It's that giant volume of regulatory legal evidence. The traditional paperwork has to move with it from institution to institution. That's what we've worked to facilitate, and we continue to support, and could foresee even moving operations in part to Wyoming as the Commercium Bank team can continue forward with the efforts here. So thank you, committee. Thank you, Mr. Chair.
Thank you, Mr. House. Appreciate it. Sure. Joe, do you have a hop in?
Yeah, I had a couple questions if I could, Mr. Chairman.
Please.
Thank you very much for those comments. First question is just to help me better understand the difference between traditional securities that are using distributed ledger technology and crypto. I mean, I understand what you're saying, but how do you practically apply traditional securities onto blockchain without it becoming quote crypto, if that makes sense, what I'm asking? That's my first question, Mr. Chairman.
Mr. Chair, thank you. Thank you for the question.
Go ahead.
And that's a good question. It really comes down to embedding the governance, risk, and compliance records into the smart contract itself, because the claim that a token represents a share of stock in a company or a unit of a limited partnership can only really be legally enumerated at the request of going to counsel's office and saying, hey, show me the contracts. It's a little silly that we're using a trust technology that then has to revert back to the human form of validation of a claim. And why can't you embed the records that are necessary? And when I say records, these are the actual legal evidences that would be subpoenaed and admitted into court as a matter of a civil matter. If there's a deposition or a requirement, how do you know that that token does represent a share of stock in a company? So you're really talking about the tokenization of an equity capital stack and really any underlying asset that can be enumerated in a legal form with a document, with a contract, subscription agreement, all of the things that go into the legal philosophy, the philosophical construct of the legality around what is a corporation, what is a limited partnership, how do I own a piece of this, right? So it's more than just the existence of the layer one token. It's really about embedding through an off-chain oracle the immutable attachment of those legal records that are necessary so that wherever that token, the unit of account, can go globally, trade on many different marketplaces around the world. And that's really, if you look at cryptocurrency and why cryptocurrency was so powerful, it was the first time you had arguably a financial instrument that could trade simultaneously in multiple marketplaces globally. And that brought market makers, that brought the liquidity that was necessary. What if you could only buy and sell Ethereum on Ethereum's website? It wouldn't be as proliferated as it is today. And the same can be said when you apply the same underlying technology to nascent asset classes or illiquid asset classes, real estate, commodities, gold, et cetera, early stage company equity. These are not easy to trade. But for the first time in history, because of the technology, it proved the velocity, it proved the cross jurisdictional lines, the ability to import, export an asset across legal jurisdictional lines. And I believe that the SPDI legislation provides that last mile that's necessary under the regulatory regime for the existing capital markets for the settlement and clearing that's necessary, that would potentially cause a significant disruption to the way that things are settled and cleared today with the DWAC and the DWS systems.
Sure, follow-up.
Yes, please, Mr. Chairman. Are you able to do what you just described without the same question I asked earlier, without the Fed master account?
I would defer to my colleague,
Go ahead,
Mr.
please.
Reason. I'm sorry, through the chair. I would defer to my colleague, Mr. Reason, on that. I would think that through a correspondent, because you're talking about the cash component, under the three-step process that the SEC articulated in the no action letter that was requested by FINRA several years ago, they succinctly described the process that was necessary to remote those assets so that the broker never touched them and took possession of them. So today you have a number of execution brokers and ATSs that are setting up to operate in this capacity. They're going to take their account balances directly from the custodian. What does the custodian provide as an account balance feed for both the assets that are available to trade and the cash balance that's available to purchase assets on the buy side of the ticket? And so to the extent that that can be facilitated through a correspondent bank, yeah, I think that gets the job done. Obviously, that adds an administrative layer to things and a costing layer from an efficiency standpoint. But we certainly would like to see the Federal Reserve get a little bit better, get a little more comfortable with the current approach. But this is a completely divergent alternative conversation as well. We're not trying to bank the crypto industry or create stable coins. We're just simply trying to improve the efficiencies over the existing market so that the capital efficiency can remain with the issuers and the investors of their securities.
Thank you, Mr. House. Follow-up, Mr. Revel? One question I did have was, assuming I heard you correctly, talk about you guys are developing this technology to kind of bring this, to really enhance this process. And I guess my question is, what is it that you're bringing to the table that truly brings that enhancement over what's currently available or what competitors are offering?
Yeah, thank you, Mr. Chair. When you say competitors, and it's interesting because the competitors are the DTCC at this point. So it's kind of a big dent in the universe scenario. There is self-directed over-the-counter trading, obviously. And in many instances, that can take days, weeks to settle a trade for an alternative asset class that's illiquid. It's not easily movable. And so efficiency, speed, transparency, validation, all of the things that the technology is there to support and can be made yet today. But it is a novel approach. It's a different approach. We formed a subsidiary transfer agent entity to help facilitate the transfer agent side of the fence for the asset classes that require it, which of course is reporting companies, Regulation A, crowdfunding companies. There's certain regulatory requirements that require a keeper of the master share record. And so a couple of years ago, we started the process with institutional issuer of real estate assets, and they filed a Form 10. It's the first Form 10 that was filed in history for a fully tokenized entity that was a company in the real estate space. And that was filed a year ago in February, and we're still working with the SEC on full approval of that Form 10, but so far we've been cleared to list and trade, and the first trade execution of that fully tokenized share. When I say fully tokenized, it's really the master share record at the transfer agent level. That first trade was executed for a reporting company in January of this year. Now, we've done that through traditional custodian with the execution broker, with the anticipation that we would switch that over to a fully tokenized digital form of custodian by way of our friends at Commercium Bank and Wyoming SPDI. But there is an opportunity for the state of Wyoming to really be a further leader in the market infrastructure for traditional securities clearing and settlement beyond just the banking side.
Mr. Co-Chair, do you have one follow-up? I know we're going into the lunchtime briefly, but how do we do that as a state? What you just said is providing that additional role.
I think the emphasis, I really like the mantra today of education, 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 and really the bifurcation between that which is a digital asset that represents cryptocurrency versus that which is a traditional security that's enumerated as a unit of account that happens to be a hash value or a token or a controllable electronic record, whatever your nomenclature is. I don't like the term token personally, and I caution against it because it crosses back over to that confusing cryptocurrency side, but a programmable form of security that is really that next generation of market infrastructure that provides ownership of the issuer's financial data about their asset and their investors' data. It's their data. It's not the institution's data. And what we found is even with the tokenization industry, there's a lot of siloing that takes place with, we call them walled gardens, where they try to verticalize all of the services inside of a single stack. And that cuts against the grain of investor choice. The SEC, everyone wants to provide choices of the matter. And if I only have single custodian or a single transfer agent or a single venue in which these assets can actually trade, that goes back against the thesis that, well, why did Ethereum become so widely proliferated? It's because it can list and trade in many different marketplaces globally. Now the liquidity can come because there's an opportunity for market makers to bring that needed liquidity into the mix.
Committee members, I know we're kind of going into lunchtime. I'd love to keep going, but out of respect for
I'll be around all day.
our time.
Thank you so much, committee. Thank you, Mr.
Thank you
Chair.
very much. We really appreciate it. Any other further testimony in the room? Emily, anybody online that's want to testify? All right, let's go ahead and break till 1:30. And we will be right back here.
Can we leave our stuff in here?
I assume so.
Thanks.
So